Hello everyone, a very good morning. Welcome to Oliveboard. I am Anshul, your JAIIB mentor, and today we are starting with a whole new series which is the May 2025 JAIIB must solve questions for your examination. So in this series we'll be discussing all the MCQs from your Macmillan book from the RBWM paper. So these MCQs are very important. Apart from having the conceptual knowledge, you also should focus on practicing MCQs. It will improve your efficiency. It will give you an idea about the questions that are asked in the examination. Also, these are very important for your revision. So we'll be discussing all the MCQs module wise. Today we are having the module A. Module A of your paper has 4 chapters. Unit 1 is Retail Banking and Introduction, which talks about the basics of retail banking. What are the characteristics, the advantages, constraints, challenges, and future of retail banking. Then Unit 2, which discusses the role within the bank operations, the 3 important business models which are approached by banks, the strategic business unit, departmental approach, and the integrated approach. Then unit 3 is the applicability of retail banking concepts and the distinction between retail and corporate or the wholesale banking. So we have the types of business process structure, the horizontally organized, vertically organized, also the business approach, the segmented, geography based or classification. And the fourth unit talks about branch profitability. We have the concept of profit and profitability, then the 3 types of profit, the measures of profitability, ROA and ROE. So, module A has 4 chapters. Let us start with the MCQs. First, we have module A, unit 1, retail banking and introduction. So, here is the first question. Try to answer them. First question says advantages of retail banking include. Option A, risk is less as client base is large. Option B, income is relatively more as spread is more. Option C, stable model with less volatility. And option D, all of the above. So here we need to understand the meaning of retail banking, the characteristics of retail banking. So basically the provision of banking products and services offered to the individual customers, typically for the non-entrepreneurial purposes. On the liability side and on the asset side, also third-party products are being offered. So retail banking and stable with less volatility as compared to corporate banking. Here I've also given you a brief description. So what are the advantages? Customer loyalty, attractive and wide interest spread. Since customers are too fragmented, there is less volatility as compared from the large corporates, and large number of clients can facilitate marketing, mass selling, and the ability. So we practice customer segmentation. We have the high net worth individuals to which we can sell third party products as well, other products and services. So these are the advantages. Correct answer is option D. Then next question, which of the following is not an advantage of retail banking? There are certain constraints or disadvantages of retail banking. So which of the following is not an advantage? High cross-selling potential we have already seen because of mass customer segment. We can cross-sell, upsell. Then high customer loyalty is there. Less volatility in business or high default rates. Which of the following is not an advantage of retail banking? So the correct answer here will be option D. High default rates is not an advantage. So what are the challenges? Customer protection and pricing. In today's digital world, we need to protect the customers against frauds, identity theft. Inadequacy of the management information system can be another challenge because a large plethora of information because of the mass customer segment is available. So we need to manage that information well. Then understanding of the KYC and anti-money laundering issues, managing risk. Different types of risks are there: market risk, credit risk, operational risk. We need to manage all of them. Then effects of the disruptive new technology. With more and more technology entering the market, old technology is becoming outdated, so the banks need to adopt the new technology. And continuing growth. All right. So out of these, option D, which says high default rates, is not an advantage. Then, which of the following is not part of retail banking? So, which products and services are offered by retail banking? We have already seen all the products that cater to the individual customers, the mass segment. So, savings, account, retail, loans, remittance services, all of these on the asset and the liability side. So, which of the following is not one of them? Internet banking, mobile banking, providing term loans for the projects, or credit card facility. Out of these, which is not a part of retail banking? So the correct answer here will be option C, that is providing term loans for projects, because it is more on the wholesale or corporate banking. So what are the products and services offered? Services include savings and current accounts, mortgages, personal loans, debit, credit card, and certificates of deposit. Retail banks can be local community banks or the divisions of the large commercial banks. Fintech companies are also providing the same services, right? Like Google and Apple. Then retail banking services to the individuals in the general public, while corporate banking only to the small or large companies and the corporate body. So this is the difference between retail banking and wholesale or corporate banking. So the correct answer here will be option C. Moving on. After the outbreak of COVID-19, the future of retail banking will depend mainly on. This question will also give us an idea that will technology or digital banking completely take over the physical or traditional banking? So first let us answer this. Option A, branch banking. Option B, brick and mortar banking. Option C, digital banking. And option D, none of the above. So after the outbreak of the pandemic, the future of retail banking will depend mainly on digital banking. So many changes have happened in the banking space during the 2 years of the pandemic because of the restrictions, lockdowns, social distances, and digital ways have become the new norm, right? CEO and managers are also planning online meetings, remotely people are working. Similarly, the customers are also seeking the same in-branch experiences in their online interactions. So all of the banking services, they do not want to stand in long queues. They want anytime, anywhere banking services. They want to access their bank accounts, make remittances, credits and debits through their mobile apps. So these are the changes. After COVID-19, we are seeing a shift towards digital banking, but this will never mean that completely it will transition and the role of traditional branch banking will be zero. It will always remain important for that segment of the customers who prefer the human experience. All right. Next, we move on to the question: the proportion of housing loan in retail loan segment is more than. What is the proportion of housing loan in the retail loan segment? Option A 50%, option B 60%, option C 75%, or option D 45%. So the correct answer here is option A 50%. So the proportion of housing loan in retail loan segment is more than 50%. Next, we have the unit 2, which is retail banking role within the bank operations. Here, the first question says the business models followed by banks for retail banking are option A, the SBU approach, option B, departmental approach, option C, integrated approach, or option D, any of the above. Before we see the answer, let us just very quickly go through the three types. The strategic business unit aims at dividing the business on the lines of SBU. These are autonomous divisions. These are flexible enough as well as to exercise control. They need autonomy. So these are profit centers. These are profit centers. If a whole company is divided into different parts, then and each will be focusing on the goal which is given to them. Like for example, any company ABC divides its works, let's say it's working in textile, right? So shoes, one SBU for shoes, another SBU for, let's say, t-shirts, another SBU for any other segment. So each of the SBU will focus on their own business, right? On their own business. Then if we talk about the departmental approach, here profit units are not divided, but organization can be divided on the basis of functions. Functions that the various teams perform. For example, there will be a different department for accounting, a different department for marketing, finance, planning, etc. And then we have an integrated approach, which is usually adopted by the smaller businesses, right? So it is a combination of the two. In banks, the approach that is followed is any of the above. Any of the above, right? So the models and the processes depend upon the importance attached to retail banking space. If the banks they want, they can create a complete separate business unit or profit unit for the retail banking, or they can create just a department focusing on retail banking. So the models or the approaches which are followed are SBU, departmental approach, and the integrated approach. Here you should know the process model which is followed by the different banks. For example, SBU approach followed by the private banks and the foreign banks. Departmental approach mostly by the public sector banks, right? Next question. Foreign banks cited in the topic which entered in the retail banking activities when not able to achieve the business objectives. So, what was the decision of the foreign banks that entered very aggressively in the retail banking segment, but they could not gain profits? What did they do? Did they continue with their business in spite of not being profitable? Or they completely moved out of the business? Or they changed their focus with some strategic changes? Or none of the above? So many foreign sector banks they aggressively entered with the retail banking segment and it was their business objective. Why? Because foreign banks they do not go by positioning objective. They have their business goals. They go by customer, business and profit targets, right? But when it is not profitable, they exit the retail banking segment. So this was the decision taken by the foreign sector banks. They moved out of the business. Right? The classic example is BNP Paribas, which entered the retail banking space very aggressively during the late 1990s, but they found that it was not profitable segment, so they exited. Similarly, American Express Bank also came out with their credit card business after taking stock of its viability. And recently, Citibank has quit the retail business in India and it has now been acquired by Axis Bank. Alright, so the correct answer is option B. Next question. The suitability of a business model or approach of a bank depends upon what does the bank take into consideration while selecting the business model? The corporate strategy only, the business objectives only, the business mix only, or all of the above? We know that banks, they structure their retail banking models mainly on a positioning platform. So the correct answer is all of the above. Next, business models of retail banking are being drawn on various aspects. In this context, which of the following aspects is incorrect? So we need to read the statement, the question very carefully. If we just very quickly go through it and see that which of the following is correct, we'll mark the wrong answer. So here the question is asking us which of the following aspect is incorrect. So what does the business model of retail banking not depend on? The product, capacity, delivery channels, or technology? We know that the retail banking segment has multiple products, multiple customers, and multiple delivery channels. So product is there, delivery channels is there, and definitely retail banking depends on the latest technology, the digitization. So we can clearly say that the correct answer is option B. Capacity is not an aspect for the business model of retail banking. All right. Now we move on to the unit 3 of our module A, applicability of retail banking concept. The first question says implementation models followed by banks for retail banking include horizontally organized, vertically organized, predominantly vertically organized, or predominantly horizontally organized model. So if we take this as a scale, so on the two extremes, we have the horizontally organized and the vertically organized. Horizontally organized model is where there is no customer information integration. A separate model is used for each of the product. Vertical, however, means where there is a centralized customer and their customer information or database, and the customer information is shared between or among the different products. Then we have between two extremes the predominantly vertically organized and the predominantly horizontally organized. In the predominantly horizontally organized, for most of the products, there's a separate model which is used or separate processing is done, but some customer information integration is there. And in the predominantly vertically organized, for most of the products, common information is used, but for some products, separate processes will be there. So this is the scale which will make the concept clear to you. So accordingly, the correct answer is option D, 1, 2, 3, and 4. All of these are the implementation models which are used. And these models are given by the Boston Consulting Group that conducted a study on the retail banking processes and deduced 4 broadly defined process models. So these are the 4 models. Correct answer option D. Next, which one of the following ways the price structuring for the products and services is attempted by the banks? So these process models are used by the banks to decide on the product models, then on the pricing, then on the delivery. So here pricing involves standalone pricing for different products and services, special codes for the high value deposits, bundled pricing or holistic pricing based on the total relationship. So the price structuring for the products and services, which is followed by the banks, can be any of the above. Either the banks can use standalone pricing, which will be the horizontally organized, special codes for the high value, which will be the predominantly organized, or bundled pricing will be the vertically organized. So the banks develop the models for pricing and the products based on certain fundamental parameters like market dynamics, then risk participation, return expectations, tenor or duration, resource positioning, and so on. And again, they will dynamically change with the market dynamics. In addition, regulatory advices also influence the pricing model. Alright, so the correct answer is option D. Next, which of the following is not included under the retail banking? This we have already seen, the different products and services which are offered in retail banking. So, which of the following is not included? Online banking is there, medium business is there, high net worth individuals is there. However, the corporate entities are not catered by retail banking segment, right? The corporate entities are not dealt or catered by the retail banking segment. Next, which one of the following norms is the backbone of retail banking income? Which one of the following forms is the backbone of the retail banking income? The liability products, asset products, treasury products, or both A and B? Backbone means which will get the maximum income for the bank so that they can sustain and continue their operations. It will be the asset products. Asset products. So there are multiple products including various types of deposits or accounts, credit and debit card, loans are also there, personal, auto, housing, insurance, mutual funds, multiple channels are also there, right? Though essentially retail asset and liability products continue the basic structure, the trend has also changed because of the emergence of third party products. But the backbone of the retail banking income comes from the asset products, the different types of loans which are offered. Next, under which category the sale of insurance products falls? Apart from the traditional retail liability and retail asset, banks are also offering the fee based products and services. These are the other products and services which we also term as para banking or the third party products. Third party products. For example, depository services, corporate agency for the life and non-life insurance, bill payment services, payment gateway facility, wealth management, portfolio management, all of these services come under the third party products. So the banks are also involved in the mutual fund and insurance products. Okay, so the correct answer will be option C. Then we move on to the last chapter of our module A, which is branch profitability. Branch profitability. First question says, out of the following, which is the definition of profitability? Profitability is a measure of an organization's profit relative to its expenses. It compares how much profit a company makes compared with its overall revenue and costs. Profitability is a measure of efficiency and ultimately its success or failure, or option D, all of the above. So here you should be very clear about the difference between profit and profitability. Profit, in general terms, we refer it to as the money which is left after taking out the expenses. So the total revenue minus total expenditure will be our profit. If a company is making rupees 20,000, it is a total revenue, but it will also have to take some expenses, make some expenses like purchasing of raw material, paying of taxes, then paying the wages to its employees, right? So when all of these expenditures are deducted, let's say they come to rupees 15,000, then the remaining 5,000 will be the profit. However, profitability is more of a relative measure. It says that if I am making this profit of rupees 5,000, how much cost have I incurred to create this profit? If to make this 5,000 profit, I am paying cost of, let's say, 7,000, so it will not be profitable for my company. It will not be a profitable business if my costs are more than my revenue or my profit. All right. So profitability definition, all of the above are correct. It is a measurement of efficiency. It compares how much profit a company makes compared with the revenue and costs. And it is a relative measure, right? Relative measure. It tells us that organizations are more efficient. They will realize more profit as a percentage of its expenses. It is a measurement of efficiency. Ultimately, it's success or failure. We can also say it is the business's ability to produce a return on an investment based on its resources in comparison with an alternative investment. So, it is a relative measure of profitability. All right. So, the correct answer is option D. Next, out of the following, which one is not a measure of profit? So now we have already discussed profitability. Profit, however, means the money that a business can generate after accounting for all its expenses. Total revenue minus total expenses. So there are different types of profits. The question says which one of the following is not a measure. Gross profit, operating profit, netted profit, or net profit. By the time that you are giving me the answer, I will tell you a little brief. Gross profit is the first line or top line profitability. It is the total sales minus the cost of goods sold. Cost of goods sold will include the advertisement cost or the raw material cost. Then we have the second line of profit, which is the operating profit, which we calculate by deducting from the gross profit. From the gross profit, we subtract the operating expenses. The operating expenses, which are also known as SG and A. SG and A. These are the operating expenses like the selling, general and administrative costs. Selling, general and administrative costs. And then we have the bottom line profitability, which is net profit. Net profit after taking into account all the expenses, including the taxes and the interest. So out of the operating profit, we will deduct the taxes plus the interest, which is paid by the unit. All right. So we can say that out of the following, netted profit is not a measure. Netted profit is not a measure of profit. So make sure that you note these things down because this question is very important. What is the meaning of gross profit, operating profit, and net profit? Also, we have the profit margins, gross profit margin, operating profit margin, and the net profit margin. You can go through the videos in which we have discussed the whole syllabus. Everything in detail we have already covered. Next question. Which of the following statement is incorrect? Again, incorrect. Profit is an absolute amount, whereas profitability is a relative one. Profit is an absolute amount. Profitability is an absolute amount, whereas so the option A says profit is an absolute amount, whereas profitability is a relative one. Option B says profitability is an absolute amount, whereas profit is a relative one. Option C says profitability is a measure of efficiency of a company in relation to the size of the business, whereas profit is an absolute number determined by the amount of income or revenue above and beyond the costs of expenses. And option D says, although a company can realize a profit, this does not necessarily mean that the company is profitable. So, go through all of these statements very carefully and then answer which of the following is incorrect. Which of the following is incorrect? So, the correct answer is option B. Profitability is not an absolute amount, it is actually the relative amount, and profit is the absolute amount. These options already give us all the definitions, right? So if we make a comparison, profit is absolute, profitability is relative, profit is a quantifiable measure, while profitability is a qualitative measure. Profit tells us the in numbers the total revenue that is generated. Profitability tells us about the efficiency. So the incorrect option is option B. Next, increased staff productivity is one of the most important tool to increase branch profitability. All right, we are given a statement. Then out of the following, which one is not true? Which one of the following is not true? Basically, which of the following is not an impact of increased staff productivity? Does it lead to reduce processing cost, or clearly defined expectations and scorecards, improved motivation and reward system? Technology alone is sufficient to increase the staff productivity? Very obviously, we know the correct answer. Basically, we are talking about the ways how which the banks can improve their efficiencies, and one of the ways staff productivity, because in addition to reducing the process cost, automation tools can also help improve staff productivity. It will enable the banks to handle more transactions and greater volumes with the same number of personnel. But productivity improvement is not dependent on technology alone. So the correct answer is option D, right? And the question asks us which of the following is not true, right? Other ways, some ways how we can improve the staff productivity: we can establish the performance management techniques like clearly defined expectations and scorecards. We can also provide reward systems, better training and supervision, like employee of the month could be a title given to the best employee. Then redefining the job roles, using more flexible work arrangements, providing mobility for the off-site work, outsourcing. All of these can be ways in which staff productivity can be improved. So these are the must solve questions for JAIIB May 2025. And these questions will give you an idea. We have already completed the syllabus in the other series. And here we will practice. All right, so the first question, if we talk about module B, so it is the most important module of our RBWM paper, and it has the highest priority as well as the maximum chapters in this unit, ranging from the customer requirements to the product development process, credit scoring, retail liability, retail asset products. All of these chapters are very important from the exam point of view. So let us answer the first question. The customer segment whose income level is between rupees 10 lakhs to rupees 50 lakhs is referred to as. So in retail banking, we know there is multiple customers, multiple customers. So customers are divided or segmented, and categories of customers are created on the basis of their income level. So here the question says income level between 10 lakh to 50 lakh is referred to as mass affluent, super affluent, high net worth, or the mass market. So the correct answer here will be option A. And this is the whole classification. Income levels between 2 to 10 lakhs is known as mass market. So 2 to 10 lakh mass market. Then 10 to 50 is known as mass affluent, which is also our correct answer. Then super affluent is 50 to 400, and high net worth is 400 to 120. All right. So that is the correct answer, option A. Next, which of the following needs fall within the classification of Maslow's hierarchy of needs? The Maslow's hierarchy of needs, again, a very important topic. It is also known as the theory of motivation, which generally talks about how the people they move from one stage to another. So there is a sort of pyramid. From the lower level needs, people move to the higher level needs, and they try to achieve more needs. There are the basic needs, and there are the uh, love and belongingness needs, self-worth needs, and finally we have the self-actualization. So which of the following needs fall within the classification? It is a multiple selection type question. So physiologicalization. These are the five levels. Urgent needs do not form a part of the Maslow's hierarchy. So the correct answer is option C. Option C. Right? 1, 2, and 3. Physiological, safety, social, esteem, and self actualization. Physiological needs are the basic needs like food and clothing, drinking water, a safe place to live. Safety needs means a safe area. Our house should be in a locality which is safe from any fire or burglary, anything. Then we have social needs, which are the love and belongingness needs. We need friends and family to share our happiness and sadness with. And self actualization is where one reaches their full potential. Their full potential. Next, customers' expectations of service quality mainly depend on the tangibility in the services, reliability, responsiveness, and assurance. So, there are three levels: the customer satisfaction, customer dissatisfaction, and customer delight. The customer will be satisfied where the expectations meet the services. So the customer will be satisfied. Customer will be dissatisfied if the service quality is less than the expectations of the customer. And customer will be delighted when the services offered by the banks will be of better quality than what was expected. So, what all constitutes the customer satisfaction? All of the above. So, customers, they want the right product mix, the right channel mix, structured process time, delivery of the promises, satisfactory service experience, effective communication, transparency, good ambience, effective and time bound grievance redressal mechanism, and so on, right? So, tangibility in services means there should be surety. For example, if a customer is coming to get a savings bank account opened, along with the savings bank account, passbook will be given or a debit card can be given. It will provide tangibility. Reliability means that the customer can rely on the bank. If there are any transactions, any fraudulent transactions, then the customer knows that the bank will help them. Then responsiveness, if the customer has any query, any grievance, so the bank should be quick to respond. And assurance, assurance means that every month or whatever the decided period, the customer will get interest on their fixed deposit or their savings deposit, right? So these are just some examples. Then ABC Bank has decided to launch a new deposit product, Core Savings Account, with some special features to attract the customers. Under which category of the customer need the product falls? So this again we are talking about the Maslow's hierarchy. When we apply to the levels of Maslow hierarchy to the bank products. So the core savings account, whether it will come in the security or safety needs, or in the physiological needs, self actualization or self esteem. So, as the name suggests, it is a core savings account, it is a basic savings account. So, it will come under the physiological or the basic level needs. So, here's the table which shows you the different types of products. Under the physiological needs, core savings account, personal accident cover, and housing loans will come. Under the security or safety needs, recurring or fixed deposit, life insurance products, tax planning, insurance, and mutual fund. These are the safety needs. Then we have social needs, consumer loans, personal loans, home loans, and car loans. Esteem, which will increase the self worth of the individual. If I buy a second house, it will increase my self worth. And finally, self actualization, retirement solutions, senior citizen term deposit, pensioners' loans, and so on. All right. Next, which one of the following statements is correct in respect of the product cycle? So there is the product life cycle, which starts from the introduction of the product, where the after the creation the product is newly introduced, so it will have low sales and low profit. When it goes to the second stage, some customers will demand the product, the demand will start rising and it will increase the profits will reach the higher stage. Then maturity is where the sales are saturated. Now all the different banks and financial institutions, competitors are also entering the market now. And finally, we have the decline stage, where if the banks do not try to improve the product or provide anything new, then the product will go out of the market. So, which of the following statements is correct? In the introduction stage, the sales volume will be low and revenue will not be sufficient. Correct. In the growth stage, which is the second stage, the product life cycle, the sales volume remains stagnant. In the maturity stage, there is more growth and sales volume peak. So the correct answer is option C, 1 and 3 only. This is the product life cycle journey. So when the product is launched or it is introduced in the market, it will have low sales and profits. As the time passes, customers they understand about the product. So in the growth stage, the profits will be rising. The sales do not remain stagnant, they continuously rise. In the maturity, the volume peaks and decline occurs after the product is being offered by competitors as well. And if we do not, the banks they try to keep the product longest in the maturity stage. If they do not take steps, then it will lead to death of the product. The best example of this is radio. When radio was introduced, it had low sales. Then the sales peaked. Customers they understood radio is helpful for listening to news, any shows, any updates. But then nothing new was done to the radio. The technology innovations like television and telephone and computers came in the market and it led to death of the product. All right. Next question. Product architecture component include what type of products are offered by the banks? The generic product, which is the core product, expected product, additional features, augmented product, adding value in addition to the features, and the potential product, which is futuristic features in anticipation. So we do have four types of products, and the correct answer will be option D. Option D. All of these are correct. Generic product is the unbranded, undifferentiated commodity like rice, wheat, bread, and cloth. It is undifferentiated. The customer will not differentiate. It can buy the bread from any company until and unless they have a specific requirement. So it is a generic product. It is a core product. In the banking scenario, generic products are saving bank account, current account, term deposit drafts, which are more or less offered in the same manner by all the banks. Then expected product is something that the customers expect, minimal purchase. For example, along with the savings bank account, a passbook is minimal expectation. Then the augmented product is a result of making voluntary improvements if along with the Pradhan Mantri Jan Dhan Yojana account, insurance and pension products are of the applicants. We know what is a credit score. It is a score which is given to the customers or the borrowers based on the past transactions, on the loans that they have taken in the past, their credit card holdings and dealings, whether they have timely repaid the loans or not, or are there any unpaid dues? Do they have too many credit cards? Are they over leveraging their credit card limit? So, all of these things are there. So, the credit scoring model is based on the defaults on the previous credit transaction, payment behavior, and the payment history, previous searches and inquiries, but not on the annual income. So, 1, 2, and 3. Again, the whole explanation is given for you. Credit score is assessed based on the dealings in credit products like the different types of loans. These can be generated by the credit institutions like the banks, or the credit information companies. Banks can also seek the report from the credit information company, which will give a free full credit report without any charge, right? So the credit score is a statistical analysis of the qualitative behavior of the customer. Using the regression and statistics, we transform it into a three-digit number representing the amount of risk the customer brings. So the credit score values from 300 to 900. 300 is a bad score, 900 is the good score. Any score above 700 will be considered appropriate by the bank to give out loan. All right. I hope all these questions are clear till now. Okay. Next, the most common mistakes in the credit score will be due to. Now, the credit scoring is a statistical analysis, and wherever the human operation is involved, there can be issues and mistakes. So, what are the most common mistakes? Confusion of names. Yes, there are many people with the same name. If you share a name with another person who has defaulted on their loan, and their default is being showed in your credit history, this can be a mistake, definitely. Human input error. If a number of rupees, let's say value of rupees 1 lakh has to be put, but due to any human error, additional zero is added, it will increase the, let's say we are representing the unpaid dues. And identity theft. Any person can use your name and identity to apply for credit cards, and too many credit cards again will show negatively. So, the most common mistakes are all of the above. All of the above. Now, what will show as or what will reflect as a good credit score? It will indicate the character of the borrower, evidence of financial discipline, if the borrower has defaulted due to genuine reasons, or longer the credit history, the better. Again, when we are talking about the issues or the mistakes in the credit scoring, the customer, if they see any issue, they should contact the bank, and they should ask why a credit card or a loan application has been declined. The bank will provide with the control number that can be seen for the credit score. Then the provisions are available on the website of the CIC for resolving dispute. So if you find anything wrong with your credit history, you have to report it to the bank and get it corrected. Next, which one of the following is not a credit information company approved by RBI? So in India, there are four credit institution companies which are working. Out of those four, which of the following is not one? CRISIL, Experian, Equifax, or Sibyl? And the correct answer here is option A. The credit information companies, presently four, are the TransUnion Sibyl Limited, Equifax Credit Information Services Private Limited, Experian Credit Information Company of India Private Limited, and CRIF Highmark Credit Information Services Private Limited. All right. They have been granted certification of registration by RBI. Section 17 of the CIC Regulation Act stipulates that a CIC may seek and obtain credit information from its members only. So the credit institution, banks, financial institutions have to be members of the CIC. They will provide the information related to an unpaid due, default, NPA, and on the basis of that, the credit report will be prepared. All right. Which of the following parameters the credit information companies normally give higher weightage? So, new credit, lengths of credit history, payment amounts owed, and payment history. So, when the credit information companies are calculating the credit score of the individual, they take into account information like the defaults on the previous credit transaction, and the payment behavior or the previous searches. Is there the warning signs in the credit score? Is the customer craving for credit, applying for too many loans or credit cards? Is the customer making frequent and unnecessary shopping for credit? Are there several new accounts or recent requests for loans? The length of credit history is also important. Older accounts are generally better. So, out of these, companies they normally give higher weightage to the payment history of the individual. Payment history. All right. Next, the banks pay interest on the balance in the savings account, but no interest in the current account. Under the CASA, we know in the savings account, although not as high as the fixed deposit, but interest is paid by the bank, but no interest is paid in the current deposit. However, the requirement of minimum balance stipulated is more as compared to the savings bank account. The minimum balance requirement in the current deposit is more. Why? The transaction cost in the current deposit account is more than the savings bank due to the provision of unlimited number of transactions. The current deposit is not preferred by the bank because it is highly volatile. It is at the discretion of the bank whether to pay interest on current deposit or not. Or option D, payment of interest depends on the individual bank's policy. So C and D are definitely incorrect. And is the current account more volatile? So no. Actually, why higher minimum deposit is stipulated in the current deposit account? Because there are unlimited number of transactions. Unlimited, there's no limit for the withdrawal or deposits in the current account. Moreover, the current account is used by the business customers, so they'll make all the payments transactions using their account. So the minimal deposit is also more. Then, according to the income tax rule, a fixed deposit or a FD or a term deposit may be paid in cash if the amount of matured proceeds is less than rupees 20,000, if the amount of matured proceeds is up to rupees 20,000, if the amount of matured proceeds is more than 20,000, or the banks can pay any amount after being satisfied of the genuineness and integrity of the customer. So, out of the following, which will be the correct answer? A, B, C, or D? So, a term deposit may be paid in cash if the amount of the matured proceed is less than 20,000 rupees. Less than 20,000 rupees. Another very important point is that the TDS is also applicable in the case of interest on time deposits. It is to be deducted in cases where the total interest paid or credited on all time deposit exceed rupees 50,000 in the case of senior citizen and 40,000 in the case of depositors below the 60 years of age. All right. Then we have another type of account, which is the two-in-one account, which offers features of both savings account as well as a fixed deposit. So there are two types of facilities: the sweep auto sweep facility and the reverse sweep facility. The question asks us the reverse sweep facility is applicable on last in first out basis, first in first out basis, first in last out basis, or last in first out basis. So for answering this question, you should understand the meaning of the reverse sweep and the auto sweep. So what will be the correct answer? The correct answer will be option D, last in first out basis. So two in one account is a combination of the savings bank and the fixed deposit, right? So if there is any deficiency in the savings account and the customer has to pay any bills or make a payment, they can use the excess amount which is kept in the FD. Or if there is excess amount in the savings account, then it can be transferred to the fixed deposit, and the balance transferred will earn the higher interest as applicable on the fixed deposit. So there is the auto sweep facility which offers maximum returns, and reverse sweep facility which offers liquidity. and it is on the basis of the last in first out basis, in which the last deposit is broken to meet the shortfall in the operating account. So the last deposit is first broken. Just go through the notes that I've given and it will be clear. Next, the rate of interest in the recurring deposit for a particular period. Now, what is a recurring deposit? It is when, let's say, any salaried individual wants to save a fixed amount every month, and at the same time they want to earn interest at the rate applicable to the fixed deposit. So it will be a contract between the customer and a banker. So the rate of interest in the case of recurring deposit will be same as a fixed deposit. It will be same as a fixed deposit, right? So the banks, they also allowed the premature payment of RD, also give loan against RD. Any person complying the KYC norms can open a recurring deposit account. Then we have questions from the retail asset side products, in which we have the home loans, home decor loans, auto loans, education loans, personal loans. So the home loans are sanctioned by the banks for the following purposes: purchase or construction of house, yes. Purchase or construction of a flat, correct. Purchase of land for construction of house thereon, addition to the existing house, so all of the above. Apart from this, home loans are also given if the individual wants to buy an old house, a second hand house, or a second housing dwelling. If they're living as a tenant and they want to purchase that same house, for that also the banks will provide loans. Auto loans are given by the banks for the purpose of purchasing new car, purchase of used car, purchase of two vehicles, purchase of all of the above. So again, all of the above. But auto vehicle loans are more approached or more popular by the NBFCs, not by the banks. Then personal loans are sanctioned by the banks based on personal loans can be for, let's say, any medical expenses or for marriage, or if it's a doctor and they want to open a new clinic, or a lawyer wants to set up an office, anything. So in the case of salary, in the case of employees, monthly or annual income in case of the business partners, the number of years of service or in business, so option D. Personal loans will be given on the basis of all of these eligibility norms. All of these eligibility norms. Next, retail loan processing centers of banks. So we have two types of retail loan or loan processes. We have the stand alone model, and we have the centralized model. The centralized model, stand-alone model is where the branches of the bank perform end-to-end functioning, right from the application to the verification of document, sanctioning, disbursement, follow-up, everything is done by the branch. Centralized, what happens from the branch, the application is sent to the RLPC or the loan processing hub or factory. There the next steps are done: verification of documents, decision on the sanction, disbursement, follow up, right? So the retail loan processing centers are designed to source retail asset business, process the retail loans, do the valuation or legal opinion, release the loan either at their end or advise the sanction to the branches. So the correct answer will be option D, 1, 2, 3, and 4 for the sanction and disbursement of loans to the RLPC. All right. Again, there is flexibility. In some banks, the appraisal and up to sanction are taken care of by the RLPCs, and the post-sanction formalities like release of loan, documentation is taken care of the respective branches. Again, go through the notes and the topic will be clear. Next, the types of credit cards issued by banks in general are silver card, gold card, platinum card, titanium card. We are issued credit cards either in the propertyship manner or in the co-branded manner. Co-branded cards, propertyship manner is where the banks they provide standalone cards independently. Co-branding in where tie-ups are done with the companies. So the correct answer is 1, 2, 3, and 4, and these are the propertyships or standalone cards. The details relating to a credit card is also given. It is a thin plastic card. It contains information such as the signature or picture. It can be used at the ATM, point of sale terminals, or merchant establishments. Credit cards are based on the concept of buy now, pay later. All right. Next question. The features available generally in all types of cards. Whether we are talking about any variant of the credit card or debit card, which features are generally available? Facility for payment of purchases. Yes. Facility to withdraw cash from the ATMs up to a fixed limit. Reward points for the usage of cards, which can be used at various locations. And cashback offers up to a certain limit. So, all of the above. These features are generally available in all the types of cards, the variants of the credit cards. Then, what are the characteristics of the debit card? Debit card is based on the concept of buy now, pay now. So, no charges or credit is created from the account of the customer to which the debit card is linked. Immediately, the amount will be debited for any payment. So, the payment of purchases are directly debited into the account. Cash withdrawals are debited to the account immediately. Payments will be payments for the purchases usage will be debited subsequently after a certain period. So no. The correct answer will be 1 and 2 only. This third statement is related to a credit card. It is related to a credit card. Next, payment default risk is embedded in which type of card there's a chance of failure to pay the card dues. It is not there in the debit card because immediately the amount is debited from the account. But in the credit card, what is happening? The charges are created, and at the end of the credit cycle the customer will make the payment along with any interest. So the payment default risk is in the credit cards. So the banks advise the credit card users about the terms and conditions like the annual fee, minimum payment due, credit limit, EMI payments, and their implications. All right. So payment default risk is embedded in the credit card. Then we have the Bharat QR, which is a QR code based payment system. It is developed by NPCI. This the question is telling us. But NPCI has developed the Bharat QR in collaboration with the MasterCard, Visa, American Express, or both MasterCard and Visa. So the correct answer is option D. Option D. So it is a QR based payment system launched in September 2016 from one source to another, from the payment to the merchant, without the need of physical card or POS terminal, directly linked through the bank account. It provides a common interface between RuPay, MasterCard, Visa, American Express, right? So simply we can scan the QR code on the screens of the point of sale machines and make the payment. All right. The objectives of NEFT are to establish an electronic fund transfer system to facilitate and invest efficient, secure, economical, reliable, and expedient system of fund transfer and clearing in the bank. Yes. To relieve the stress on the existing paper based fund transfer and clearing system. Again, correct. So both A and B are correct regarding the objectives of the NEFT, the National Electronic Fund Transfer. All right. So it is a nationwide payment system facilitating one-to-one transfer. It is operated on a deferred net basis, DNS, right? Even walk-in customers who do not have a bank account can also deposit cash at the NEFT, maximum of rupees 50,000. So all of these terms are there. Then what are the characteristics of RTGS? Remittances and fund transfers transmitted through a series of process input travel from the customer to the beneficiary end. Remittances communicated through the structured messaging process. Statement of message on a gross basis. Remittances are credited on a dynamic basis. So all of the above. All of the above are the characteristics of RTGS. What is the process flow of RTGS? Transactions are interbank transactions, customer payment, and delivery versus payment. So, what happens in the transaction? Request to emanate from the customer to route a remittance through the RTGS is created. The customer will give the details like the amount to be remitted, the remitting customer's account, which is to be debited, name of the beneficiary, bank and the branch, the IFSC code. Then a structured message is created under the RTGS, authenticated and communicated to the payment system gateway. The messages will be received, authentication will be done, and the beneficiary bank will send a message for the credit of the beneficiary. All right. So, all of these are the characteristics of RTGS. Then, what are the advantages of ECS payment? Electronic clearing services. What are the advantage? There is no need for issuing any check to the beneficiaries. This is correct. The payment defaults will not happen if there is sufficient balance in the account. No follow up is needed by the beneficiary as payment will be received automatically, and it is hassle free for the mandate issuer. So, all of these are correct regarding the ECS payment. ECS payment. So, electronic clearing services, we have the ECS credit and the ECS debit, which has now been replaced by the National Automated Clearing House on the 1st of May 2016. It has taken place of ECS. So earlier ECS had variants, the local ECS, national ECS, and regional ECS. It created a lot of problems for the users. To solve that, a national level centralized clearinghouse system has been created. Next, the term EFT means which of the following? Electronic foreign transfers, electronic financial transfers, electronic fund transfers, or electrical fund transfer. So EFT means electronic fund transfers. So there are two criteria for the centralized payment system. We have the RTGS, NEFT, NECS. And for the decentralized, we have the clearing houses at the MICR centers and the electronic clearing service open to all the eligible licensed bank. Next question. A settlement system in which the processing and final payment of fund transfer takes place continuously. So, continuously. We have seen that we have two payment systems. One works on the deferred net basis, another works on the real time continuous basis. So, it is the real time gross settlement, right? One to one basis, there are no batches which are created or no time limits. 24/7 individual basis, the transactions will be completed. So the transfer instructions take place continuously. Next, which of the following statement is correct about the India's payment system? So here we are talking about the benchmarking which is done by RBI. According to the latest reports, India is categorized as leader or strong in more than 50 indicators of the benchmark report. India is in leadership position in the large payment system and fast payment system. India is weak on certain indicators such as people per ATM or point of sale terminal, or all of the above. So the correct answer is all of the above. This benchmarking exercise is conducted by RBI, and it has released the report on the benchmarking India's payment system, providing a comparative position to the other major countries. We compare the position of or the performance of India's payment system with other major countries. First benchmarking exercise was carried out in 2019 with respect to the position in 2017, and latest it has been done covering the same countries undertaken in respect of the position in 2020. All right, so this is the benchmarking exercise according to which we are leaders or strong in respect of 25 parameters out of 40, weak in respect of 8 out of 40. India has made significant improvement in the digital payment network. Also, for the public transport, digital payment options are available. So, benchmarking exercise summary is also important. Next, we have the technology or digitization of retail banking products. So the process models in retail banking are structured as this. We have also studied in the previous chapters. We have the horizontally organized, where the individual process platform supports one product only, correct, used by the public sector banks. Vertically organized model where functionality is provided across all the products. So there is a centralized database in which customer integration is there. Predominant horizontal sum modulation within a product oriented feedback. Predominantly vertical, which is offers common intervention information for most of the related service. So all of the above or any of the above will be correct. The meaning of all the four types of processes are given here. Next, the technology models adopted by banks. Again, the banks can adopt fully outsourced model, partially outsourced model, in-house model, or any of the above. So, any of the above. Public sector banks, they usually follow the in-house model where they use their own resources, their own staff to perform all the functions. Partially outsourced is used by the private sector banks, and fully outsourced model is used by the foreign sector banks. We are referring to the technology. Now, EB Bank has collected data with respect to the needs of its customers. So this is a case study type question, and it has developed a product based on the information collected. What type of information has the bank collected and analyzed? So there are four types of information that the banks collect from the market and the customers. We have strategic, tactical, operational, and managerial information. So when we are talking about the needs of its customers, then we are referring to the strategic information. Strategic information refers to the account opening, basic loan origination data, updated information, income details at the various frequencies. Transaction refer to the disbursement to the final settlement in the loan account, and analytics and alerts, both operational and strategic alerts. So if we are talking about the customer need and expectations, then we are referring to the strategic information. Then technology and retail banking are inseparable, separable, complementary, or supplementary. Inseparable means they go hand in hand, they cannot be separated, or bank and technology can work independently. Complementary, they complement each other, or supplementary, they can be used in place of one another. So technology and retail banking are inseparable. Inseparable. Why? Because technology is convenient for automating the process, providing the customers new delivery channels and payment. Cost of services has also reduced. Use of banking technology like ATMs, credit card, mobile banking has also increased. Then we have the Indian Financial Technology and Allied Services, IFTAS, has been acquired by. Here we need to remember all of the institutions that we have studied. The IDRBT, which is the Institute for the Development Research in Banking Technology. IDRBT has developed the Infinet, SFMS, NFS, and the IBCC, right? Then after the recommendations made by Dr. C. Rangarajan committee, it was said that the role of IDRBT should be only research and development. Monitoring of these institutions should not be given to the IDRBT. So the IFTAS was set up. And later on, IFTAS was taken over by Reserve Bank of India. So IFTAS, headquartered in Mumbai, the director of IDRBT was the first chairman of IFTAS. IFTAS has taken over Infinet, SFMS, and IBCC from IDRBT, and then it was wholly acquired by RBI in March 2019. So it has been taken over by RBI. Next, from the functional perspective, banking technology has mainly dash important dimensions. How many dimensions are there in the banking technology? So, three dimensions are there: use of appropriate hardware, use of advanced computer science, and conducting business for the quantification, measurement, mitigation of the risk. Right? So these are the three important dimensions of the banking technology: hardware for providing services to the customers, various delivery channels, then advanced computer science for the marketing related problems like customer segmentation, customer scoring, etc., and risk management as well. Then the banking technology is a discipline which deals with finance and risk management, information technology and communication technology, computer science and marketing science, or all of the above. So, all of the above. We have already seen how banking technology is employed for the finance and risk management, ICT, and computer science. Next, towards the evolution of banking technology, the first most notable technological advancement was Diners Club credit card, ATM, online banking, or mobile banking. So the correct answer is Diners Club. Introduced when? In 1950, and it was the first credit card. Then, after Diners Club, ATMs were introduced. After ATMs, the mobile technology, computer technology was introduced. Online banking in 1980s, mobile revolution in the 2000s. Then 2011 we saw Google Wallet, 2014 we saw Apple Pay, and fingerprint authentication and touch ID in 2015. So the correct answer is Diners Club credit card. Next, out of the following, which one is not the use of artificial intelligence in retail banking? So artificial intelligence is playing a very important role. We can see chatbots, we can see automation. Without the involvement of humans, all the functions are being performed by artificial intelligence. Here you need to understand the difference between AI and automation, the difference between artificial intelligence and natural intelligence, which is possessed by human beings. So, areas where artificial intelligence is being used are passbook updation kiosk, chatbot, cash deposit machine, but teller counter being managed by an employee is not an area. So, customer support and help desk, humanoid chatbot interfaces can be used, risk management, security, and we can track the suspicious behavior, log analysis, and spurious emails. And for digitization and automation in the back office, AI can be used. Then, default in the repayment and credit cards and personal loan segment is mainly due to banks. They face huge amounts of NPAs and defaults on the credit that they create, and it is an issue. But here we are asking that the default can be of which type? Can it be a genuine default due to the reasons beyond the borrower's control? Yes. If the borrower lose their job, or there is a medical emergency, or their business is shut down. Willful default, where the default is intentional, the borrower has the capacity to repay, but they are diverting the funds, siphoning off the funds, or any of the above, or both of the above. So it can be any of the above. any of the above. So we need to make sure that if it is a genuine default, we will take care of the customer, we will deal with them in a sympathetic manner. And if it is a willful default, where the borrowers deliberately not repay the loan, then we can take penal action against them. We can also reject further loans and advances. So, how we are going to deal with genuine defaults and the willful defaults is different. Then, the recovery of loans through the lok adalats can be resorted to the banks up to a limit. So, recovery of loans can be either using the SARFAESI, under which the intervention of court is not required, or it can be through the DRT Act, the recovery of debts to the banks of the 1993, SARFAESI 2002, 1993 DRT Act, wherein special courts DRT and DRAT are created, or it can be through the lok adalat. So only those cases which are under rupees 20 lakh, less than rupees 20 lakhs, can be taken by the lok adalat, which are organized under the provisions of the Legal Services Authorities Act of 1987. All right, and these should not be of criminal nature. Next, the terms and conditions for the repossession as per the recovery policy. There should be a notice period before taking possession. Yes, a 60 days notice period should be given to the borrower. Circumstances under which the notice period can be waived: if within 60 days the borrower, or let's say the borrower is a willful defaulter, then this notice period can be waived. The procedure for taking possession of the security: a secured creditor can appoint any authorized officer. They can take the possession or they can assign a manager. A provision regarding the final chance to be given for the borrower, this will also be done. So 30 days time notice is given before the sale or auction. And if the borrower makes the due payments before that, the property will be given to them. So all of the above are the conditions for the repossession. Next, what is the objective behind the recovery process adopted by the banks? Whether it is increasing the number of corporate loans, increasing the NPAs, reducing the NPAs, or reducing the number of loans. The objective is to reduce the NPAs, because the NPAs will show as a negative factor in the books of the banks. It will hamper their lending capacity, and it will also create a bad image in the market, right? So, security repossession is aimed at recovery of dues and not to derive the borrower of the property. Next, which of the following is not a step towards the conversion of data into decisions? So, here we are talking about the management information system. Which of the following is not a step in the MIS? Process, information, inaction, or decision? So, the correct answer is option C. The MIS is an old management tool for better management and scientific decision making. It is dependent upon the information. So we have data, raw data, which is used and transformed into information, categorized, classified in a manner that can be retrieved easily by the managers for taking the important decisions. Next, a customer choose a bank mainly on which of the factors? When a customer is going to choose a bank, because, for example, if we are talking about a generic product, a core savings account, more or less all the characteristics are the same, then what will be used by the customer to differentiate? The ease of doing business, the quality of personnel and services, the range of financial services. So, all of the above. The customer of the bank would like to know the status of the account. They're also interested in obtaining the loan assistance, in tax consulting and tax planning. They would also want the remote delivery channels to pay electricity bills, telephone bills, taxes, and duties. All right. So the correct answer is all of the above. Then the factors affecting issues relating to the MIS are mainly humanistic factors, organizational factors, environmental factors, or all of the above. Factors affecting MIS basically means that the success or failure of the MIS will depend on what? So, yes, it is going to depend on the humanistic factors like the lack of understanding of the needs of the users or participation of the managers or lack of accuracy of data. Environmental factors are also there, like there's the lack of procedures and methodology, lack of serious consideration, and organizational factors like inadequate education of the users, training, lack of evaluation. So the correct answer will be yes, D, all of the above. All of the above. All right. Now we move on to the last unit of our module B, which is securitization. Which of the following statements is appropriate in respect of the securitization process? So when we are talking about securitization, I hope you understand that we are referring to the various acts like Surface Act, under which the securitization and reconstruction is done. Right? Now answer this question. Which of the following statements is appropriate in respect of the securitization process? The lender first selects the assets that they want to securitize. The issuer, who is a special purpose vehicle, makes payment to the lender. The assets are converted into a pool of securities by the lender for the purpose of issuing the pass through certificate, and the pass through certificate are sold to other investors. So the process of securitization starts with the banks. They pool all the NPAs, the non performing assets. This pool is acquired by the asset reconstruction company or the special purpose vehicle. Special purpose vehicles create security receipts which are transferred to the qualified institutional buyers. The qualified institutional buyers. SPVs in return will make the payment to the banks. And these security receipts are tradable in the market. So from here, the QIBs can recover their amount. So the correct answer here will be option D. This is the complete process of securitization. So starting from the banks, they will collect money into a pool. Then the pool will be divided into small parts and sold as securities by the SPV. Buyers of the securities get the invest or the mortgage payment, and the banks get the due payment for their NPAs. Then what is the meaning of securitization? Definitions are given in the securitization, like what is the meaning of obligator, originator, securitization, SPV, and sponsor. So the definition of securitization means pooling of individual loans and selling as a package. So the originator, who is the lender, segregates the loans, leases, or receivables into a pool which are of homogeneous nature in respect of the type of credit, maturity, and interest rate, and these are transferred to the special purpose vehicle, which can be any company or a trust constituted for carrying out the activities of securitization, and they're sponsored by a sponsor, which means a person who establishes or promotes a SPV. Now, securitization can be effected for the standard assets only, rated accounts only, standard and substandards, or all of the above. For which type of assets the securitization process can be used? So, the securitization can be used for all of the above. All of the above. Being the exception, what is the exception? The on balance sheet standard assets except revolving credit facilities like two cash credit account or the credit card receivables, or assets which are purchased from other entities, or securitization exposures and loans that have bullet repayment of both principal and interest. So except these, all the assets can be brought under the securitization process. So here we have given the securitization process as well. Now, according to the revised guidelines, the reduced minimum holding period for securitization from 12 months to 6 months, from 12 months to 24 months to 12 months, from 12 months to 9 months, or no change has been made. When we are referring to the minimum holding period, the originating banks can securitize loans only after these have been held by them for a minimum period in their books. This is done so that the project implementation risk is not passed on to the investors and a minimum recovery performance is demonstrated prior to securitization. All right. So RBI has now revised the minimum holding period from 12 months to 6 months. And this is the minimum number of installments, the repayment frequency, weekly, fortnightly, monthly, and quarterly that you can go through. All right. Next question. The NARCL has been set up by the National Asset Reconstruction Company Limited. NARCL has been set up by, or which is also known as the Bad Bank. Whether it is set up by the government of India, the state governments, by banks, or none of the above. So the correct answer is C. It is set up by the banks. So the NARCL has incorporated in July 2021 with authorized share capital of 2,750 crore and paid up capital of 1,409.05 crore. RBI has given the license to NARCL under the SARFAESI Act. Here, public sector banks will have 51% shareholdings. So they will act as the bad bank. Apart from the NARCL, the IDRCL has also been set up, the India Debt Resolution Company Limited, which is incorporated on 3rd September 2021. MCQs from Module C. These are the must-solve questions for JAIIB. I'm sure you would have started your preparation. And so these MCQs will help you analyze your preparation. If you have any weak points, then you can give more time towards it. And it will also help you decide where you need to put more efforts. So all these MCQs are very important. Make sure that you subscribe to the channel and you like this video so that you do not miss any of the updates. Let us start. Along with the answers, I have also given the explanations so that you can use these for your revision as well. All right, so the first question from Module C. Bank marketing refers to, then you are given certain statements. It is a multiple selection type question. Identifying the most profitable markets now and in the future, assessing the present and the future needs of the customers, setting business development goals and making plans to meet them, adapting to a changing environment in the marketplace. So out of these four statements, which are correct? 1 and 2 only, 2 and 3 only, 1, 2 and 3 only, or 1, 2, 3 and 4, that is all of the above. So this question from Module C, Unit 17, Marketing and Introduction. How marketing in retail banking is approached? So the correct answer will be option D, that is all of the above. So certain definitions of marketing have been given. Sir Frederick Seaborn has defined marketing as the creation and delivery of customer satisfying services at a profit to the bank. Kenneth Andrew has defined bank marketing as the matching of bank's resources with the customer's needs in the most profitable manner. A more specific definition is given by Derek Vander Veer. According to this definition, retail banking space marketing refers to identifying the most profitable markets now and in the future, assessing the present and the future needs of the customer, setting business development goals and making plans to meet them, and adapting to a changing environment in the marketplace. So these statements are from the definition given by Derek van der Veer. So you should remember these definitions. Next question. Marketing mix refers to what all components are there in the marketing strategy, or what all is included in the marketing mix for a retail bank. The product and price, promotion and place, people and process and physical evidence, or all of the above. So actually there are 7 P's in the marketing mix which are interrelated. Success of one depends upon the success of another. So if we want to create a profitable product, we'll also have to charge a price which is acceptable and affordable by the customers. Similarly, we need to promote the product well through advertisements and awareness. The place that will have greater demand for the products, the people for which it should be created, the different segment, process, and physical evidence. So the correct answer will be D. It refers to the different ingredients that make up a good meal for the customer. These are structured and offered to the customers to make them consume sumptuously and enjoy and get satisfied also. So the service and delivery levels should match the expectations of the customers, right? So when the customers' expectations are met by the service quality, then the customer will be satisfied. So the correct answer is option D. These are the 7 P's of marketing mix. Yes, right, given over here. Next, all the P's in the marketing mix are interlinked. In order to effectively develop and market a product or service in the retail banking space, which one of the element is not relevant? So we have already seen the 7 P's. Product is a part, promotion is a part, process is there, but priority is not among the ingredients. So the correct answer is C, right? So these 7 P's are both independent as well as interdependent in the marketing effectiveness. Each one of the P's is very important in deciding the marketing strategies. They individually contribute their part, but they're also interlinked in such a way that one P will be a deciding P for the effectiveness of the other ingredient. Right? So the promotion will depend upon the people and the place. The promotion will also depend upon the process. Product will depend upon the price and the people. Similarly, all of these are interconnected. Next, in which stage of the marketing process does an organization answer questions like who, where, when, and how for the offering? In the marketing process, there are certain stages, and each of these stage give us a different information or approach. Which of the stage answers questions who should prepare the product, where it should be launched, when, and how? So is it the marketing planning stage, marketing control, marketing analysis, or marketing implementation? So the correct answer will be option C, which is marketing analysis. Marketing analysis. Marketing analysis is in an organization, focuses on analyzing the. Actually, the correct answer will be option D, not C. It will be option D. Marketing implementation. Marketing analysis focuses on analyzing the market and marketing environments in which it should be introducing the product. Marketing planning refers to the focusing during the SBU, the goals and objectives. Implementation answers the who, where, when, and how for the offering. It focuses on performing the activities. We are finally implementing the plan. And control means making any changes, regulating the goals by auditing, measuring, evaluating, and acting upon. So first we will analyze the market. Based on the market analysis, we'll develop a plan. Then we will implement that plan, and then we will control or regulate it. So the correct answer is option D, marketing implementation. Next question. Electronic channels in retail banking. So there are multiple delivery channels in retail banking. We have the physical channels and then we have the remote channels. Remote channels also include the electronic. So which of the following is the electronic channel? Whether we are talking about ATMs, internet banking, mobile banking, or all of the above. Which of the following is correct? So the correct answer will be option D. All of the above are electronic channels. So the delivery channels can be divided into physical channels, which include the branch and the extension counters, the business correspondent and business facilitators as well, and electronic and remote channels which are not attached to the bank. So ATMs, internet banking and mobile banking. Alright, so accordingly the correct answer is option D. All of the above are electronic channels. Next question. What are the advantages of a good branch layout? So now when we are talking about the physical channels, physical delivery model, we have the branch. So what are the advantages of having a good branch layout? It promotes efficiency as it will ensure the smooth flow of services. Internal communication effectiveness increases, thereby facilitating better coordination among the staff, resulting in better customer service. Provides a comfortable and congenial work environment to the staff, which results in high employee motivation. Serves as an image building tool for the bank. Or option E, which says all of the above. So what are the advantages of a good branch layout? Good branch layout will include proper lighting, indications, and sitting arrangement for the customers, waiting area. There should be amenities like water, drinking water facilities. So all of these are the advantages. What are the advantages? It promotes efficiency, proper placing of various service facilities, comfortable environment, so employee motivation will also be high. Image building tool, good impression and generates goodwill. Helps reducing the cost because the facilities are planned at maximizing the efficiencies. So it results in cost optimization as well. So all of these are the advantages of a good branch layout. Next, the facilities available for mobile banking customers. Now we have moved on to the electronic channels. Mobile banking provides which services to the customers? Facility for using banking facility from anywhere. Yes. Easy operations, instructions carried out by self. Correct. The user interface should be simple to understand. Option to pay utility bills is provided. Transfer of funds between the accounts, same bank as well as other banks. And option E, all of the above. So the mobile banking provides the core services as well as the other services. So all of the above. All of the above. Mobile banking have entered the public sector banks as well, with the twin objective of offering an additional user-friendly channel, also attracting the younger generation customers to expand their customer base. Earlier, the public sector bank's customer profile was more skewed towards the senior customers than the youth. But now they're also trying to draw the youth segment towards them. Right? So the customers can check their account balances, host of other service features, and so on. Transfer of funds between accounts within the bank, utility payment facility like payment of insurance, premium, telephone bills, energy bills, or all of the above. So for this question also, the correct answer is E, all of the above. So here we have given only a few examples of the services offered by banks on internet, like view of balance, last few transactions, settle the statement of account, transfer of funds, transfer of funds to other bank through NEFT or IMPS, recurring deposit account, pay their indirect taxes, and so on. So a plethora of services are provided. Next, harmonization of the turnaround time and customer compensation scheme is applicable too. So RBI has given the guidelines for harmonization of turnaround time. The time taken for the completion of a service right from the application to the service finally reaching the customer. Also regarding the compensation that has to be paid to the customer. So it is regarding to, or it is applicable to all the customer transactions, all the digital transactions in the banks and digital transactions all across all the authorized payment systems, or option C, all of the above. So harmonization of turnaround time is for all of the above. RBI has put in place a framework on the turnaround time for the resolution of customer complaints and the compensation across all the authorized payment systems to build in customer confidence. So it is the prescribed time is our limit resolution for the failed transactions. The banks and other operators endeavor towards quicker resolution of such failed transaction. Customers who do not get a benefit of the redressal can complain, they can register a complaint with the RBI Integrated Ombudsman Scheme 2021. I hope you remember the process of filing a complaint. First, the customer will file a complaint with the bank related to a deficiency of service. Then 30 days time, the bank will have to respond or solve the grievance. If not, the bank will tell the procedure to the customer. They can raise the complaint to the ombudsman, the RBI integrated ombudsman. And the three earlier ombudsman schemes have also been merged. So the correct answer here is option C. Next, integrated ombudsman does not include the following concept. Is there a one nation, one ombudsman scheme? Yes. Does the integrated ombudsman provide a single portal for all the grievances? Grievances related to the bank services, to the NBFCs, and the digital payment. So yes, for all the grievances, a single portal is there, an integration of the existing scheme. So all of these are the concepts included in integrated ombudsman. So we will mark answer D. None of the above is not a component. That is, all of the above are included. So Ombudsman RBI in 2021 launched the integrated ombudsman scheme to make the alternate dispute redressal mechanism simpler. So the Banking Ombudsman Scheme of 2006, the Ombudsman Scheme for the NBFCs 2018, and the Ombudsman Scheme for Digital Transaction 2019 have been integrated. And now the Integrated Ombudsman Scheme for the large non-bank PPIs in 2019 has also been introduced. Alright, so the correct answer is option D. Next, which of the following payment app works without internet facility? Which of the following apps the customers can use without having access to the internet? Can they make mobile? Can they make any transaction through the mobile banking app without internet, or through the UPI app, or UPI 123 app, or mobile wallet? So the correct answer will be option C. NPCI has developed the UPI 123 Pay to facilitate UPI transactions by the feature phone user. It is a phone that does not have internet connection, and it was launched on 8th of March 2022 by Shakti Kanta Das, the then governor of RBI. This is very important. Launched when? 8th March 2022 by Shri Shakti Kanta Das. It is an instant payment system for feature phone users who can use UPI payment service in a safe and secure manner. The feature phone users will now be able to undertake a host of transactions. They include, there are 4 technology alternatives in the UPI 123 Pay. The interactive voice response number, app functionality in feature phones, missed call based approach, and also proximity sound-based payment, NFC, near field communication technology. All right. So UPI 123 Pay does not require internet facility. Next, with regards to the cardless cash withdrawal from ATM, which of the following statement is correct for the cardless cash withdrawal? The customer has to scan UPI QR code of ATM. The cardless cash withdrawal is interoperable as per the RBI directives. Debit card is not required, or option D, all of the above. So, the correct answer, does the question ask us which of the following is correct? So, it will be D. It will be D. All right, so the customers were allowed to access ATMs of the bank in which they were maintaining the accounts. It restricts the customers to either use the off-site or on-site, but now changes have been made. Customers have the facility of withdrawing from other banks' ATM and even from the white label ATMs. This is because of the National Financial Switch, NFS, NFS, right? So there are two important networking arrangements called the cash tree and the Infinet, which has been initiated by the NFS. We have studied about the NFS and the Infinet. The charges, the one-time subscription fee that has to be paid, how many ATMs have been already installed by the NFS, white label, brown label, and so on. All right. Next, human interventions in the delivery of services are the internal customer staff of the branch, specialized marketing personnel, direct selling associates, or all of the above. So when the banks are delivering services to the customer, services are intangible, but there are some tangibility or human intervention which is provided to through all of the above. The internal customer, who is the staff of the branch, specialized marketing personnel can be appointed, direct selling associates can also be appointed, so all of the above. The service delivery can be approached either through the branch or the remote medium beyond the branch. Through the branch, we have the branch staff and the dedicated marketing managers. And beyond branch, the banks can employ direct selling associates from the agencies working in this particular field. So the correct answer is option D. Next, the requirements for delivering effective service to the customers. When the bank staff or the direct selling agents or marketing agents, they are creating an atmosphere that is comfortable to the customers and it is convenient for the delivery of service, what are the requirements to be fulfilled? They should understand the customer, their income level, financial profile, needs and requirements of the financial products and the life stage. They should also sell and cross-sell the right products to match the requirements. Post-sale follow-up for the customer satisfaction and customer empathy should also be there. So the correct answer will be E. All of the above are the requirements. All of the above. So understanding of the customer, their needs, cross-selling, post-sale service, customer empathy means putting yourself in the shoes of the customer and looking the service level from the customer's perspective. The agents or the branch staff, when they are explaining the customer about the product, they should themselves understand the product features and the service prescriptions. Only then they can better sell the product or the service, and they should have the attitude for customer service and the concept of team in customer delivery. Next, the tie-ups are entered into the banks for bulk sale of the following assets. Which type of assets are sold in bulk by entering in tie-ups by the bank? Tie-ups can be entered with the in the case of home loans with the construction or the builders. In case of auto loans, tie-ups can be entered. In case of personal loans, education loans as well, the schools or the colleges that are organizing any event for the induction of the students, there the banks can set up their kiosks. So the correct answer will be E, all of the above, right? So tie up with builders for extending home loans, special concessions like waiver of processing charges, documentation and mortgage charges can be given. And similarly, apart from home loans, other areas also, other types of loans also can be given by the banks through tie-ups. Next, what is the risk associated with the direct selling agent marketing model? Direct selling agent marketing model. Is there any risk involved? Is there a market risk, control risk, operational risk, or reputation risk? So if the DSA, which is appointed by the bank, they are carrying or they are using some unlawful measures, or let's say direct selling agents are appointed for the selling of credit cards, they are mis-selling and they're not explaining the customer the correct details of the credit card and the customer is going into debt. So all of this will create a reputation risk for the bank. So mis-selling by the DSA is rampant, especially in the credit card space. The employees, they mis-sell the credit card, making the customers fall into a debt trap. Same is the case with the mis-selling of retail loans because the prices are not explained clearly. So this will result in dissatisfaction for the customer and reputation risk for the bank. So the correct answer will be option D. Next, we move on to the customer relationship management. So why customer relationship management is important for the retail banks? Option A, there's a need to increase the operational efficiencies and to derive more value for from the employees. There's increasing competition in the retail banking, the increasing importance of fee-based income, delivery channel efficiency and application of technology, or option E, all of the above. So why a proper customer relationship management approach should be taken by retail banks for all of the above? So the objective is to give a complete 360-degree view of the customer. Many businesses manage different customer relationships with multiple information system, which weaken the customer service and ultimately reduce the total sales. So to realize the benefits, it is important to have an integrated solution which will give us a complete view of the customer. So if we have the complete knowledge of the customer, we can serve them better. Now, what are the stages involved in the CRM initiative? Capturing the customer's profile and dissecting the profiles into common information buckets, designing suitable products and services to cater to the different information buckets, offering the products and services to the targeted and segmented customers with the right pricing, right sales and service process, tracking the customer information on a dynamic basis to design new products and services. Or option E, all of the above. So the stages involved are all of the above. All of the above. So customer centricity is important, capturing the customer's profile, creating a 360-degree view, designing suitable products, offering the products and services to the segmented customer, right sales and service processes. So customer relationship management gives us the correct insights about the customers, their needs and requirements. Accordingly, products and services can be sold. Then next question, what are the benefits of CRM? It improves the customer satisfaction and cross-selling potential, helps the banks to derive increased share of wallet, helps to understand the customer lifetime value, helps to manage multi-delivery channels. Again, all of the above are the benefits of CRM. Helps in cross-selling, understand the customer lifetime value, helps to take on competition because more customer focus and retention is there. Operational efficiencies are enhanced, right? So the correct answer will be E, all of the above. These are very simple questions, right? So we will see this as a revision of the whole chapter. What does the customer relationship management deal with in retail banking? Storing the client data and understanding the client's requirements. Yes, establishing close personal relationship with the customer on a dynamic basis. Updated needs and requirements should be known by the bank. Keeping in touch with the customers to ensure that their needs are understood. So follow up on the service and products, friendly behavior with our clients, and all of the above. So all of the above is correct. All of the above. Next question, what is the full form of BCSBI? So BCSBI, which has now been discontinued by RBI, but it is very important for the for us to understand how service quality was approached. So what is the full form of BCSBI? Banking Codes and Standard Bank of India, Banking Codes and Standard Board of India, Basic Customs and Standard Board of India, or Basic Codes and Standard Bank of India. So the correct answer will be Banking Codes and Standard Board of India. So RBI in 2003 constituted a procedure and performance audit of public services committee under the chairmanship of Shri S.S. Tarapore, former deputy governor. Very important. Wherever you are given the name of a committee and the chairperson, you should remember the name. So Shri S.S. Tarapore committee, and this committee felt the need to continuously upgrade the package of services. So they recommended setting up of the BCSBI, and it was set up on 18th of February 2006. So it is a collaborative effort of RBI and banks. First point, which is very important. Second, it is a voluntary code. It is not mandatory for all the banks to join the BCSBI. It is voluntary, but RBI advises them to join it, and it sets the minimum standards of banking practices when they're dealing with individual customers, and they have to follow. So these standards will be based on the international best practices, then based on the own surveys conducted by RBI. The code is for micro and small enterprises and separately for the individual customers. So when we are dealing with the individual customers, what should be our behavior? What should be our approach? All of these things are there. Which of the following fall under the purview of the BCSBI? Which products are covered in the BCSBI? Current account, PPF, non-resident account, or all of the above? So yes, all of the above are covered. Apart from that, other products, every product and service is covered. Then the Banking Codes and Standard Board of India is aimed at. What is the objective of BCSBI? Promote good and fair practices by setting minimum standards, correct. Encourage market force through competition to achieve higher operational standards is also correct. Promote a fair and cordial relationship. So all of the above. All of the above. Increasing awareness, promoting safe and fair customer dealing, foster confidence, promote fair and cordial relationship, market forces, increase transparency. So the correct answer will be D. All of the above are the objectives. Next, commitment to the customers under BCSBI. Again, which products are covered? Savings account, loan account, remittances, credit cards and mobile banking. Which products and services are covered under the BCSBI commitment to customers? Again, all of the above are covered. All of the above. These are the key commitments when dealing with the individual customers. Next, the Reserve Bank of India has decided to dissolve the BCSBI. All right, in 2000, it was decided to dissolve the BCSBI out of the following, which will act as the nodal department? The Consumer Education and Protection Department, CEPD, Banking Ombudsman Scheme 2006, Ombudsman Scheme for NBFCs, or Ombudsman Scheme for Digital Transactions 2019. So now, to act as the nodal officer to see the supervision and monitoring, the CEPD has been set up. The major functions include administering the Banking Ombudsman Scheme and acting as the nodal department for the BCSBI, right? So two codes are there under the BCSBI, the commitment to customers and the commitment to micro and small enterprises. So the CEPD will look after these commitments. Next, the integrated ombudsman scheme is applicable to. We know the three schemes of ombudsman related to the bank, related to the NBFCs, and the digital payments have been merged into the integrated ombudsman scheme. So now all the regulated entities will be covered. All the regulated entities will be covered into the integrated ombudsman scheme. Next question. Firms need to collect and analyze the data pertaining to marketing for. Why the banks or the firms need to collect and analyze the data? For protecting their organization as knowledge oriented, enabling the top management to keep control over the sales force, taking the required steps for effective marketing of their products, or for utilizing their information technology capabilities. Which of the following is correct regarding why the firms need to collect and analyze the data pertaining to marketing? So the answer is C, taking the required steps. This is according to Samuel Smith. A marketing information system is an interacting, continuing, future-oriented structure of people, equipment, and procedures. Main purpose to satisfy the customers' wants and needs at a profit. Next, an effective MIS fulfills analysis of quantitative information, coordination among the functional and specialist executive, and it is limited to the current scenario. MIS is not limited to the current scenario. It also depends or it also utilizes the information gathered in the past. So the correct answer will be option D, both 1 and 2. So what are the steps in the MIS? Collecting and assembling data, processing of data, analyzing of data, and storage of data. Make sure that you download this PDF and keep it for your revision, because the explanations given alongside the questions are very helpful. Next, the components of the marketing information system do not include, read the question very carefully, it does not include the marketing intelligence system, internal record system, information technology system, or none of the above. So there are four components of the marketing information system, but the information technology system is not a part of it. The four subsystems are internal record system, market intelligence system, marketing research system, and the marketing management and science system. Very important. MKIS consists of these four subsystems, but it does not include the information technology system. All right. Who are the ultimate users of the marketing information system? The customers of the bank, the competitors of the firm, the decision makers in the firm, or both 1 and 2. So the ultimate users will be the decision makers in the firm. The decision makers in the firm. Next. So this is a case study type question. You need to tell me which of the following situation falls under the purview of the marketing research system. Which of the following can be dealt with by the marketing research system? Riddhi Vriddhi Bank wants to send Diwali greeting cards to all its fixed deposit account holders with a deposit of rupees 10,000 and more. Do they need to conduct the marketing research for this? The Money Honey Bank wants to have a profile of Kalahandi district to decide about opening a new branch there. Get Rich Fast Bank wants some comparative business statistics with other 10 peer level banks in the country. Or option D, Bank Baroda branch of the Prosperous Customer Bank is 12 years old and it recorded a compounded annual growth rate of 20%. However, during the last 2 years, the branch has witnessed a significant decline in the deposit. So now, the managing director of the bank desires to know the causes for this reversal in the business trend and suggestions for correcting the situation. So, in which of the following situations the bank will conduct the marketing research system? So, the marketing research system will be conducted for the Baroda branch of Prosperous Customer because they want to know why their sales have reduced, why the deposits have reduced. If we talk about the Riddhi Vriddhi Bank, they want to send Diwali greeting cards to all its fixed deposit account. So they can use the internal record system. They can see which customers have a deposit account. If the Money Honey Bank wants to have a profile of the Kalahandi district about opening a new branch, so they can use the marketing intelligence system, right? And if they want to have a comparative business statistics, then they can use the marketing management and science system. But the option D relates to the marketing research system. Next, the purpose of computer usage in the MKIS is primarily two. In the MKIS, marketing information system, in which area the computer is used primarily, whether to generate reports, to meet the specific user needs, retrieval of data, or for the day-to-day operations. So in the MKIS, computer is used for the retrieval of data. Retrieval of data. So there is the hardware usage and the software usage. Hardware is used when computer attested for the breakdown and software usage for decision modeling, conventional programming, expert system, artificial languages. All right. Now you need to tell whether the following statements are true or false. True or false. First, marketing information system is not concerned with the evaluation of information collected from either primary or secondary. This will be false. It is concerned with the evaluation of information. Second statement, the marketing information requirements of a firm are very limited and for one time, again it is false. The data which is stored can be retrieved and used any number of times by the decision makers. The marketing information collects and analyzes the information as per the system initially prescribed, and it is not concerned with the type of information required by the management. This again is a false statement. Typically, most of the information for the marketing information system is collected from the secondary source. This can be true. Secondary source means the customers, and consumer is of no relevance for the marketing information because entire information is collected from independent. So again, this will be false. So the correct answer is first, second, third and fifth are false statement and only fourth statement is true. Next, now you need to match the following items between column A and column B, right? So we have in the column A, marketing research system, marketing intelligence system, marketing information system, customer database and data analysis. We need to match it with the items given in column B. So the marketing research system, the data is collected specifically for a particular reason. We are conducting a research for a particular purpose. Then marketing intelligence system means the database management. storing the data in such a manner it can be retrieved and used by the decision makers as and when required. Then the marketing information system, where the sources are used, primary and secondary. Primary are the customers, secondary are the published information like newspaper, articles. So the correct answer for C will be 1. And then customer database, the different type of data information which is stored about the customer. It is geographic, demographic, psychographic, behavioral data. And data analysis refers to the operations research tool. Operation research tools. Then we are left with conducting research for the new theories. It will be the marketing and adopting detective or intelligence gathering technique on competitors. So the correct answers are given here. Next, now again we need to state if the following statements are true or false. Supercomputers are used in MKIS? No, not yet. It uses the hardware and the software technology. Interbank communication makes use of hypertext or hypermedia technology. Again, it will be false. And the MKIS deals with the integration of organizational strategies and decision making process. It will be true. It will be true. MCQs from the Macmillan book of our module D of RBWM paper. So this is for the May 2025 JAIIB RBWM exam. And these questions are very important. I'm sure that your preparation is going good and these will help you in your revision. So make sure that you like the video, share it with your fellow aspirants and subscribe to the channel and do not miss any of the updates. So we will go through these questions one by one. Along with the questions, I've also given the explanations to each one of them that you can use for revision. So let us start with the first question from our module D. So if we talk about module D, it has 4 chapters from unit 23 to unit 26: importance of wealth management, investment management, tax planning, and other financial services provided by the banks. All right, so let us start. First question: a professional service provided by wealth managers include option A, investment planning, option B, tax planning, option C, retirement planning, or option D, all of the above. So here we are talking about the wealth management advisory services, which combines the financial services to address the needs of the affluent classes of the clients. It is a professional service provided by the wealth manager and it includes investment planning, accounting, tax planning, estate planning, retirement planning, portfolio, and financial services. So the correct answer will be D, all of the above. All of these are included in the portfolio for the management. These are included in the wealth assets of the client. So wealth management is an investment advisory service that combines other financial services to address the needs of the affluent clients. It is a high-level professional, the wealth management advisor, who manages an affluent client's wealth typically for one set fee, and it is appropriate for wealthy individuals. Why? Because a fee needs to be paid and there needs to be a minimum portfolio to apply for portfolio or wealth management. Alright, so the correct answer is option D. Next, as per provisions of Income Tax Act 1961, any long-term capital gains arising from transfer of any capital asset would be exempt from tax under section 54 EC of the Act if the entire capital gain realized is invested within dash months of the date of transfer in eligible bonds. So, if you are getting a capital gains and you do not wish or you want to be exempted from the tax on the capital gains, then within a certain time period you can invest in the eligible bonds and get this exemption under section 54 EC. So this is under the tax management. So what will be the correct answer? Within 6 months, within 9 months, within 1 year, or within 3 years? So the correct answer will be option A, which is 6 months. 6 months. So exemption on sale of house property, on reinvesting in specific bonds, exemption is available under section 54 EC when capital gains from the sale of the first property are reinvested into specific bonds up to rupees 50 lakh. And the money invested can be redeemed after 5 years, but they cannot be sold before the lapse of 5 years. And the investment needs to be done within 6 months from the time, the date of transfer, but on or before tax filing date. Alright, so the correct answer is option A. Next, a perpetual bond is a financial instrument. Again, bonds also come under the assets. There are different types of bonds which can be managed. We have the convertible bonds, regular convertible, mandatory, and reverse. We have the government bonds, which can be fixed rate, floating rate, sovereign gold bonds, inflation indexed. Then bonds are also issued by the municipal bonds, which can be general obligation or revenue, and retail bonds are also there. Out of these, the question asks us what is the meaning of a perpetual bond. So it is a financial instrument with option A, 3 years maturity, 5 years maturity, 10 years maturity, or there is no maturity, or it has unlimited maturity date. So perpetual means something that continues. So the correct answer will be option D. It is known as a perp, which does not have a maturity date. So it means that the issuer pays interest to the investors indefinitely but doesn't have to repay the principal. Interest will be paid by the issuer of the bond. Indefinitely means there is no maturity, there is unlimited maturity, but they are not required to repay the principal. So the investors receive fixed interest payment in the form of coupons. Issuer does not have to repay the principal, and these bonds can be used to finance the long-term projects or restructure debt. All right, next question. Out of the following, which type of asset management is not followed by wealth management? So there are 3 types of asset management types followed by the wealth manager. Which of these 4 is not among them? Asset allocation management, concentrated management, diversified management, or tactical management. So there are 3 types. These include the asset allocation, diversified, and tactical, but concentrated management is not a type. So asset allocation is an investment advisory fully dedicated to managing the investment portfolios with the only focus on initiating income generation. This is the only reason or aim. It aims to balance the risk by moving among the investment categories. The area, let's say mutual fund or any other area that will generate more income, the managers can shift towards that particular component. Then tactical management, selecting the appropriate ways to achieve financial strategies. Let's say the main aim is retirement planning. So what or where should the investments be made? So financial strategies by choosing the best alternatives and tactics. And third is diversified, which help its clients in providing a flexible model which helps in meeting the need of the client. So there are 3 types of investment or wealth management. All right. Okay. Next question. Which of the following is not the element of investment? Now we move on to investment. Investment management. Investment refers to the savings that we invest. So saving is equal to income minus expenditure. And if we invest that savings, we can generate surplus money on it, right? So investment can be made in securities, preference shares, debentures, bonds, physical assets like gold, silver, or real estate as well. So what are the elements of investment, or which of the following is not one? Option A, illiquidity, B, return, C, safety, D, risk. So we know that the characteristics or elements of investment are return, risk, safety, and liquidity. So illiquidity is not an element. Return refers to the type, the regular income, or it can be the increase in the value of investment or capital appreciation, what return we are getting from the investment. This is the main objective of any type of investment. And again, depending upon the nature of the investment, whether it is risky, less risky, or non risky, it can be a deciding factor for the return. Then, risk refers to the variability in return because of the loss of capital. In general, we say more risky an investment, more are the expected returns. But again, risk will mean the loss of capital or non payment of the income, right? Then we have safety. The investors, they want how much, only that much risk should be there, that at least the original principal on maturity should be received with no loss in value and hindrance. This is safety factor. Then liquidity, the investor can sell their investment in the market as need arise without much transaction costs, less energy and time. So the investments are liquid. And finally, we have the objectives, which can be maximizing the return and minimizing the risk. This is the basic objective. Apart from that, other objectives can be safety, liquidity, hedging against inflation, and it will differ from one investor to another, depending upon her or his risk appetite. So these are the elements of investment. Next, full service investment bank offer the following services. So here you should know the difference between investment manager and the investment bank. Investment manager is someone who manages the surplus money with the clients. Clients, they already have surplus money that they want to invest in securities and get some returns. Investment bank, on the other hand, they have to raise funds for their clients. Their clients now have a deficit. They want to raise funds. So that will be the function of the investment bank. Coming back to the full-time investment management or investment bank, following services are provided: underwriting, mergers and acquisitions, equity research. Which methods can be used by the investment bank for raising funds? All of the above. Underwriting means capital raising, and underwriting groups work between investors and companies. They want to raise money or go public via the initial public offering process. This serves the primary market or the new capital. Mergers and acquisition between two firms, so advisory roles for both buyers, sellers of the business. Sales and trading, matching up buyers and sellers of securities in the secondary market. Equity research of the securities, and asset management. So these are the services which are provided in the investment banking. All right. So deals with the creation of capital for other companies, governments, and other entities. So D, all of the above. Next, SEBI has mandated that one must have a minimum corpus of Indian rupees dash to start investing with the portfolio management services. So like we said, the portfolio management services is fee based and only the affluent class can participate. Also, they should have a minimum capital holding corpus, then only they can give their portfolio to the managers. So what is this minimum corpus? Whether it is rupees 100 lakh, rupees 50 lakh, rupees 5 crore, or rupees 25 lakhs. Which of the following is correct? So portfolio management services is a customized service offered to the high net worth individual, and it is tailored as per the investor's return requirements. So an investment policy statement is drafted, but before that, they need a minimum corpus of rupees 50 lakh. So the minimum investment is governed by SEBI, and it is mandated that one must have a corpus of 50 lakh to start with investment in the PMS. It makes it a bit difficult for the investment for the lower income profiles. This is one of the biggest disadvantage. Then if we talk about the fees, so fees also charges, and these can be very high. The asset management fees vary between 2 to 22.5%. For example, if the investment amount is 10 lakh, then the asset management charge would be around 20,000 to 25,000. So these are the two key costs. So the correct answer is option B. Next. As per SEBI guidelines, minimum net worth requirement of a portfolio manager. So when any entity wants to start the portfolio management service, they should have the minimum net worth. Is it rupees 10 crore, 100 crore, 5 crore, or there is no such requirement? So actually the minimum net worth required for a portfolio manager should be rupees 5 crore. Right? Rupees 5 crore. So SEBI has come up with new regulations effective from October 1, 2020. No upfront fees will be charged. Operational fees excluding brokerage cannot be 0.5% per annum of the client's average AUM. Then the maximum exit load of 3% if the client no longer wants to continue the portfolio management services. They can exit, but the maximum exit load of 3% can be charged in the first year, 2% in the second year, and only 1% in the third year. If they have to exit after 3 years, then no exit load is applicable. Then the clients have to be onboarded directly. We should avoid client engagement with the intermediaries and distributors. Then CA has to certify the minimum specified net worth of the portfolio managers is rupees 5 crore, and the monthly report is mandatory. All right. So the correct answer is option C. Next. In the new tax regime, the exemption limit for the super senior citizen of age 80 years and above for the financial year 2021-22. So now we have been given the new tax slabs in our budget, but because our syllabus talks about the income tax slabs for the financial year 21-22, so we'll be studying that. Now, in this chapter, tax planning, we need to understand the meaning of financial year, assessment year, previous year, then the residential status, then what or how should we choose between the old tax regime and the new tax regime. All of these things we have covered in the series where we are discussing the whole syllabus of RBWM. So make sure that you watch all the videos there as well. So here, what will be the correct answer? Rupees 5 lakhs, rupees 3 lakhs, nil, or rupees 2.5 lakhs. So the correct answer will be option D. The exemption limit for the super senior citizens of age 80 years and above for the financial year 2021-22 is rupees 2.5 lakhs. Next, rebate under Section 87A of the Income Tax Act helps taxpayers to reduce their tax to nil if the total income after deductions under the Chapter 6A does not exceed rupees 5 lakhs. So, this is known as tax planning. We can have the benefits of deductions, and after the deductions, if the value or the remaining does not exceed rupees 5 lakhs, then the taxpayers will have nil responsibility. They can reduce their tax to zero. This provision is applicable in the new tax regime only, in the old tax regime only, both 1 and 2, or there is no such provision. So the correct answer will be C. both in the new tax regime and old tax regime, this rebate is available. So the rebate is available to a resident individual if his income does not exceed rupees 3,50,000. The amount of rebate shall be 100% of the income tax or 2,500, whichever is less. And it is available only to the resident individual. Alright, so this is all about the tax rebate under section 87A. Make sure that you study all of these sections very carefully about the tax exemption. Section 54, exemption on sale of house property. 54F, exemption on capital gains. 54EC, exemption on the sale of property, on investing in real, on specific bonds. All of these are very important. Next, if a person with higher income invests more in tax saving schemes, out of the following, which option is better? So here we are talking about whether one should choose the new tax regime or the old tax regime, right? So if they are investing their income in more tax saving schemes, they should choose the old tax regime. So here's the difference. The new tax regime is beneficial for the people who make low investments, and it offers even lower income tax slabs. For instance, a assessee having total income before deduction up to 12 lakhs will have higher tax liability under the old system if they have investments less than 1.91 lakh. So if a person invests in less tax saving schemes, it is better for them to go for the new regime. However, if that individual already has in place a financial plan for wealth creation by making investments in the tax saving instruments, health insurance, life insurance, making payments for the children's tuition fees or EMIs, buying a house, and so on, this means that they are investing in the tax saving schemes. So for them, the old regime helps with higher tax deductions and lower the tax outgo. So whether you are investing in more tax saving schemes or not, this will help you decide between the new tax and the old tax regime. Then we have the last chapter of module D, which is the other financial services. First question, parabanking refers to distribution of life insurance policies, non-life insurance, mutual fund, or all of the above. So parabanking or the third party product refers to the distribution of all of the above. Right? This is the meaning of third party or other financial services. So the banks are permitted to undertake certain eligible financial services or para-banking activities. They can do so either departmentally or by setting up subsidiaries. Both the norms given by RBI are different. If the banks want to take a departmentally, they have to do so without risk participation. With risk participation, they can set up subsidiaries. So para-banking services include bank assurance, which is insurance policies by the banks, depository services, mutual funds, credit and debit cards, and so on. Alright, so the correct answer is D, all of the above. Next, banks distribute the following types of products in the life and non-life insurance business. We already know the meaning of insurance, the contract between the insurer and the insuree or the person being insured. And there are different types of insurance schemes that are available: health insurance, life insurance, and asset insurance. There are endowment policies, term insurance, money back, and pension plans under the life insurance. And when we are talking about the insurance business by bank, they can do so with risk participation through a subsidiary, or they can also do so by undertaking insurance broking or acting as a corporate agency, and departmentally as well. But here the correct answer, that the banks, they distribute regular premium individual policies, single premium individual policies, as well as the group insurance policy, right? So banks have been allowed to distribute the non-life and life insurance business by the finance minister in the budget speech 2013-14 have announced that the banks will be permitted to act as insurance brokers. Then RBI formulated the regulations license of banks as insurance brokers in 2013 to enable banks to take up the business of insurance departmentally, but without risk participation. If they're undertaking the insurance business, then they can do it without risk participation departmentally and with risk participation only through a subsidiary or a joint venture. Banks can also distribute the insurance products as a corporate agency. So, banks can distribute the products of one life insurer, one non life insurer, standalone health insurance companies, or all of the above. So, again, all of the above. So, the bank can set up a subsidiary or a joint venture for undertaking the insurance, and they can also act as a corporate agency. But this is the eligibility criteria. Its net worth shall not be less than 500 crore. Its minimum prescribed capital should be there. Its level of NPA should not be more than 3%. It has made a net profit in the preceding 3 financial years. And the track record of performance of its subsidiaries should be satisfactory. Alright, so the correct answer is option D. Next, the maximum number of mutual funds that can be distributed by banks as a corporate agent. So, mutual fund business is also undertaken by the bank as a third party service. What happens in a mutual fund? The pool of assets is created. Investors they pool their money, and then the fund managers they invest in securities and returns as per their contribution to the pool. So the pool is created by not one but the money of many investors, and they are invested. All right. So there are equity funds, fixed income funds, money market funds, closed-ended interval, and so on, hybrid schemes, solution-oriented schemes. So the banks, the maximum number of mutual funds that can be distributed by the bank is that there is no limit. There is no limit to this. All right. So the mutual fund distribution by banks has emerged as a key element in the fee-based distribution. This new concept, mutual banking, has emerged, offering new products and service innovations to the customers. When one mutual fund launching a co-branded debit card, this was also a tie between the bank and the mutual fund company. So it provides maximization of comfort for the customer, bank, and the mutual fund. These tie-ups are structured in a way that will provide comfort and benefits to all the parties. All right. So the banks can offer mutual funds, or these can distribute mutual fund as a corporate agent, and there is no limit to it. Again, the mutual fund business can be undertaken by the bank, acting as a sponsor bank or acting as an agency, and so on. All right. Next, which of the following is not the salient feature of mutual fund? Salient features, or what are the benefits of mutual funds undertaken by the banks? So, professional management, diversification, complexity, and liquidity. So, we can very easily answer this question, which is not a salient feature. So, complexity is not a salient feature. Why? Because a mutual fund is a form of collective investment that pools the savings from a number of investors who share a common financial goal. This common financial goal can be tax saving, or it can be regular flow of income, or hybrid schemes can also be there. So, a mutual fund pools money from many investors and invests the money in the stocks, bonds, short term money market instruments, or other securities, or even a combination. And these are together known as the portfolio. Then each unit represents one investor's proportionate ownership. Then the money which is collected by the asset management company is invested in the money market instruments as shares, debentures, and other securities. So this is the process. Investors pool in their money with the fund managers who invest in the securities. Securities, they generate returns, and proportionately the returns are paid back to the investors, right? So these are the features. Again, we have different types of mutual funds. Open ending, which does not have the maturity date. Closed ended, which run for a specific period. Interval, which allows the fund house to purchase the units only during a particular pre-decided time period. Then the schemes can be equity schemes, debt schemes, hybrid, solution oriented, or any other. Again, a very important chapter. You should know about all of these products. Next question. TReDS was launched in 2016 for MSME to extend credit. So the TReDS platform. Why was the TReDS platform created? For the MSMEs. So the TReDS platform to extend credit at a very competitive interest rate, mitigate the credit risk, discount the trade receivables of the MSMEs or all of the above. So what happens? The MSMEs, let's say they sell certain products to the buyer. The buyer, however, buys those products on credit. But because the MSME do not have a large shareholding or capital, they will require continuous funds to run their business. So what they can do, also the buyer can delay the payments. So to protect the MSMEs from the delayed payments, the government has started the TReDS platform. On the TReDS platform, the MSMEs, they can go and post their account receivables or discounted receipts, which will be then price will be raised by the bidders, and the maximum price or the maximum bidding will be accepted. So the correct answer will be D, all of the above. All of the above. So if we talk about the TReDS platform, it is an initiative by RBI under the Payment and Settlement Systems Act of 2007 to facilitate MSMEs receivable payments from the corporates. So the twin issue of promptly encashing receivables and eliminating the credit risk. Right? The MSME sellers, corporate and other buyers, including government departments, PSUs, and financiers, will be the direct participants. The platform has doubled its business volume and it was launched when? In the year 2016. Macmillan, all MCQs. And these are the must solve questions for JAIIB. And today we'll be covering the last module of our syllabus, which is the Module E. This module E is the additional reading material on home loans. We have 4 chapters in here: the lender's appraisal procedure, housing finance and tax planning, mortgage advice, and valuation of real property. It is not given as a separate module, so we tend to forget it or we tend to leave it saying that it is just an additional reading material. But no, these are 4 chapters that we need to cover. So we'll be practicing the MCQs. Before we start, make sure that you like the video, share it with your other fellow aspirants, and also subscribe to the channel because all of these videos, all of these updates are very important for your exam preparation. So let us start with the first question for today. So the question says to consider the loan amount under housing loan. Which of the following statements is true? It is a multiple selection type question. You are given 5 statements, and out of these 5 statements, you have to see which statements are correct. The property is jointly held with the spouse, and the spouse is a co-borrower. The property is held in a single name, and the spouse stands as a guarantor. The borrower's son or daughter who already has a steady income. The salary is routed through the bank account and joins as a co-borrower. Expected rental less taxes, cess, etc. in case the house or flat being purchased is to be rented, and the regular income from all sources can be considered to arrive at the total eligible loan amount. So when we talk about the appraisal of loan, so loan origination, the process is right from the time the customer walks into the bank with a request for loan till the time the loan is finally disbursed. So we'll be having various stages here, like the information acquisition, the credit appraisal, sanction, disbursement, and the follow-up. So in the credit appraisal process, we decide the quantum of loan which is to be given. So what all we take into consideration when deciding this? First option is all of the above. Option B is 1, 2, 4, and 5. Option C is 1, 4, and 5. D is 1, 2, 3, and 5. Or option E is 1, 3, 4, and 5. Take 10 seconds to answer this question, and then I will tell you the correct answer. All right. So when we are doing the appraisal for the home loan, we will see what is the eligible loan amount. The parameters could be a preferred age group, the minimum salary, score in the credit information report, the area or the locality where the home loan is given, and the negative list containing other disqualifications. So the gross monthly income, cost of purchase, the amount under the cost of purchase, construction, renovation. All of these things will be taken into consideration, and the correct answer will be option A, that is all of the above. All of the above is the correct answer. So when you are studying the loan appraisal process, make sure that you go through all of these points. All right. So this will be there. Then next question. This is a case study sort of question. Mr. Satish Kumar, working as a senior gazetted officer in a government department, having 20 years left over service, was recently transferred to Hyderabad. He approached a branch, and requested that he is in pursuit of a good house or apartment in Hyderabad for immediate purchase, and he requires a in principle sanction. Whether the bank accedes to this request, if so, it is valid for how many months? So we can see that they are a senior gazetted officer, so they'll have a regular salary, and they still have 20 years left for this service. They have good amount of time left. We see that when the people are still in their service, then banks prefer to give them loans, and they want to purchase a good house or apartment in Hyderabad, so there is no negative disqualification. So yes, it will be given, and it is valid for 3 months. All right, so these all of these conditions are in favor, and the bank will give the loan. They will sanction the loan. All right, next question. State whether the following statement is true or false. If the house property is bought purely from investment angle, expecting the appreciation of value over a period. If someone is buying a house only as an investment, and they feel that in the future years the value will increase, the loan should be considered risky and dealt with differently by tightening norms relating to margin, security, and guarantee. Is this statement correct or not? The person, they are purchasing the house only to invest, and they feel that the value will increase. Is it considered risky? Yes, definitely it is considered risky. And will it be held differently? So the margin will be kept more, security will be asked, security should be valued, and guarantee will also be asked by the bank. So this statement is absolutely true. Next question. Registration of charges with SARSAI in case of housing loan should mandatorily be made online within how many days of creation of equitable mortgage? So whenever a borrower a borrower comes to a bank to take a loan, they in turn give a security or a mortgage is created on the immovable property, equitable mortgage or mortgage by title deeds, right? And it is required by the bank to get the charge registered. Either the bank or the borrower, they have to get the charge registered with SARSAI. With SARSAI. Why? Because if the borrower defaults on the loan and they have to go to the process of securitization, then the secured creditor will get the priority. And if they do not get it registered, even though the loan that they have sanctioned was, let's say, in 2016, later on they have not gotten it registered. Later on, Bank B had also given a loan in 2018 on the same property. So a second mortgage is created on the same property and they get it registered. So the priority, even though the loan was given first by Bank A, the priority will be given to Bank B because they have gotten the charge registered. So the question asks us, in the case of housing loan, the registration of charges with SARSAI should mandatorily be made online with how many days of creation of equitable mortgage? Option A 30 days, option B 45 days, option C 90 days, or option D 4 months. So the correct answer is within 30 days the charge has to be registered. And Sarsai also says that if the customer is not getting the charge registered, it will be the responsibility of the bank to get it registered. Then all the charges that are paid or the fees that are prescribed will be recovered from the customer. All right. Next, we have housing finance and tax planning. So the question says an individual took a loan of 25 lakh for purchasing a flat for self occupation on 30th March 2015 and paid 2,20,000 towards interest during the financial year 2016-17. So this amount is only the interest that have paid. Principal, we are not talking about the principal, just the interest. Then the maximum amount of interest which he can claim as a deduction would be. So these norms are given, the tax benefits in respect of housing loans. There are deductions on the payment of home loan interest, which is given in section 24. Then the tax deduction on principal repayment, which is given in section 80C, and tax deduction for the first time home buyer, which is given in section 80EE. All right. So the interest on housing loan can be claimed as a deduction from the income from property, salary, business or promotion, profession, and any other source up to a maximum of 2 lakh rupees, up to a maximum of only 2 lakh rupees. All right, so the correct answer is option C. Even though they had paid 20,000 more, but the maximum deduction that can be claimed is 2 lakhs. And there are certain conditions. Loan has been taken on or after 1st of April 1999. Loan is for the purchase or construction of a residential property or as refinance of the principal amount. The lender issues a certificate at the end of the financial year, and the interest payment of the home loan is taken for a self-occupied property. All right, so this is given in the section 24B of the Income Tax Act. It talks about the deduction on interest payment on home loans. Next, this is again a case study type question. Husband and wife jointly raise a loan in April 2014 for constructing a house for self occupation. The construction was completed in July 2015. They have been paying the housing loan installments on a 50-50 basis from their respective incomes. During the financial year 2016-17, they had paid an interest of 4,25,000. Then the maximum interest which each of them can claim on the deduction. Whether they can claim rupees 1 lakh, 2 lakh, 1,50,000 or 1,75,000 as deduction. They have paid interest of 4,25,000. Again, we are talking about the interest, so the correct answer will be option B. In option B, the maximum deduction on interest, peak pre-construction interest deduction is again 2 lakhs, and thus if your current year interest itself exceeds rupees 2 lakhs, then you will not be eligible to get any additional deduction. All right, so the correct answer is rupees 2 lakhs. Next, an individual took a loan of rupees 10 lakh for purchasing a plot of land during financial year 2010-2011 and has paid around 1 lakh 10,000 towards interest and around 57,000 towards principal. However, he has not made any contribution under section 80C, 80CCC or 80CCD. He will be able to claim deduction. Now, the question, although it is very long and it might scare us seeing that, oh, a case study has been asked. But all you need to see is that he has not made any contribution. And when he has made no contribution, then no deductions will be allowed. No deductions will be allowed. All right. So interest paid on a loan taken to purchase is not eligible. Deduction under section 24B. First point, only loans taken for the purchase, construction, repair, renewal, or reconstruction are eligible. And the principal repayment on a loan taken for the purchase is also not eligible for deduction. Only the principal repayment of a home loan is eligible. Therefore, given the individual has paid 1,10,000 towards interest and 57,000 towards the principal, but not being eligible, they have not made any other contributions. So, they will not be able to claim any deductions for the interest and the principal on the loan for the plot of land. Alright, so the correct answer is option D. Next, fill in the blanks by selecting the suitable words given in the bracket. A rupee dash is worth more than a rupee dash. The options are tomorrow and today. A rupee dash is worth more than a rupee dash. So here we are sort of talking about the mortgage advice. So the correct answer will be a rupee worth or rupee today is worth more than a rupee tomorrow. So in the first blank there will be today and in the second blank there will be tomorrow. Then by applying rule 72, rupee will double in 9 years if the rate of interest is 18%, 9%, 8% or 6%. So there are some rules which are given to us. First, if we talk about the first statement. So it is the mortgage advice profession which is given, and according to it, the statements are correct and it is referring to the time value of money interest and the annuities. So a rupee today is worth more than a rupee tomorrow. This means to permit realistic appraisal, the value of the cash payment or receipt must be related to the time when the payment takes place. So we can say that rupee 1 received today is worth more than rupee 1 which will be receivable at a future date. Right? For example, if 100 rupees was invested today at 5% compound interest rate, it would accumulate to 105 at the end of 1 year. Simply what we'll do, we'll multiply rupees 100 with 1.05 to 110 at the end of 2 years and so on. All right. So there are certain rules which are given. The rule 72, 115 and 144. Rule 72, 115 and 144. So the question, second question, by applying rule 72, rupee will double in 9 years if the rate of interest is. So what happens in rule 72? or 115 or 144, simply we divide the number by these numbers. For example, if we borrowed rupees 1000 at 6% interest rate, then 72 divided by 6 is what? It is 12. This makes 12 the number of years it would take for your debt to double to rupees 2000, right? And if we are talking about 9 years, then you can guess the correct answer now. Calculate and guess the correct answer. Simply in the rule 72, we divide it by 72 and the correct answer will be 8%. 8%. Yes. Then next, the registration fees for the registration of documents in Maharashtra is approximately dash percent of the consideration of the document, but subject to a maximum of rupees. So it will be 1% and maximum is rupees 30,000. And the last question, interest at 15% per annum means monthly interest at what percent? If the interest is 15 per annum, so monthly interest will be at what percent? How do we calculate the monthly interest rate? We divide it by, we multiply it by 12. So the correct answer will be 1.25%. So multiply by 12. All right. Next, state whether the following statements are true or false. In India, mortgage advice profession is carried out without any regulations. Is the mortgage advice carried out in India without any regulations? So, yes, it is true, right? Second, by applying Rule 72, okay, the same question is here. The rupee will double in 9 years if the rate of interest is 18%, 9%, 8%, or 6%. So, we have already calculated it. Then we are given the cost of inflation index from 2000 and 2001, 2006, 7. Given the information, the cost of inflation index is given to us. Second, Mr. Sukumar bought a house in 2001-2 for rupees 3 lakhs and sold the same in 2006-7 for 7 lakhs. Calculate the capital gains. Calculate the capital gains. Try to calculate. So, how do we calculate the capital gains? We will first determine the cost of inflation index for the years in which it was bought and sold. So, for the year 2001 to, it was 426. And for the year 2006-7, it was 519, right? Then simply we will use the formula, the indexed cost of acquisition. So the indexed cost of acquisition formula I have given right here. Yes, so what you need to do, the CII of the sale of the year, so original purchase price multiplied by the cost of index of the sale year, so 2006-7. So the purchase price is 3 lakhs multiplied by 519, dividing it by the CII of the purchase year, which is 426. This is how we calculate the indexed cost of acquisition. Using your calculators, you can approximately calculate it. Around 3 lakhs 65,000 will be the answer here. 3 lakhs 65,000. And then capital gains is subtracting from the sale price the indexed cost of acquisition. So the sale price is 7 lakh. If we subtract from it 3 lakh 65,000, then what we will arrive at around 35 or 3 lakh 34,000. All right, so the correct answer will be 3 lakh 34,000. So all you need to do is remember this formula, the indexed cost of acquisition, and then you will subtract from the sale price the index cost of acquisition, and you will arrive at the capital gains. I hope this calculation was clear. So this formula is important. Next question. Select the correct statements from the following. The documents relating to the following transactions of immovable properties are required to be compulsorily registered. Which of the following documents are required to be compulsorily registered? Gift, lease of immovable property where the period is more than 1 year. Instruments which create any right in an immovable property of a value of more than 100 rupees. So A only, A and B, all of the above or none of the above. So the correct answer will be C, all of the above. All of these require the registration, whether it is a gift or a lease of immovable property or instrument which create any right. All right. Then we move on to the last unit of our module E, which is valuation of real property. The question says, a newly constructed building stands on a plot costing rupees 1 lakh. The construction cost of building is 20 lakh and the estimated life of building is 66 years. The investor wants a 5% return on the land cost and a 6% return on the construction cost. Calculate the annual rent to be charged if the annual prices cost 0.5% of the cost of construction and other outgoings equal 30% of the gross rent. And we are given that the coefficient of the sinking fund at 3% for 66 years may be taken as 0.005. So let us write down whatever is given to us. The return on land cost. The return on land cost is 5% of 1 lakh rupees. So 5% of 1 lakh rupees will be rupees 5,000. This will be the return on land cost. Then the return on construction cost, they want 6% of 20 lakh. So 6% of 20 lakh, use your calculators. Return on the construction cost will be rupees 1 lakh and 20,000. 1 lakh 20,000. All right. Next, we are given that the total income desired is this. This is the total income which is desired. We'll mark it as A. Now, the outgoings will be calculated by the annual repairs. Annual repairs is given 0.5%. So 0.5% of 20 lakhs, the outgoings will be 0.5% of 20 lakhs, that is 10,000 rupees. And other outgoings we are given at 30% of the gross rent. So other outgoings we can calculate at 30%, or we will simply write it as 30R. Let us say we are taking this as 0.30R. All right. R is the gross rent. Let's say it is the gross rent. Now from here we will start our calculations. The amount towards sinking fund. How will we calculate the amount towards sinking fund? It is given 0.005 in the question itself. It is given 0.005. So multiplying 20 lakh with 0.005, what we will get? We will get 10,000 rupees. 10,000 rupees. Hence, the net income will be R minus 0.30 or R minus 20,000. So we equate these, we can calculate R is equal to 1,45,000. Let me just clear it. So now R will be equal to 1,45,000, and we had calculated 0.70 divided by 0.70R. Cross multiply it, cancel it out, and you will arrive at the rent per month as 2,07,143. This will be the total rent of the year. And if we calculate it for the month, then we will simply divide it by 12. So 2 lakh and 7,413 divided by 12, approximately we will get rupees 17,262. So this will be our annual rent and the monthly rent. Rent per month will be 17,262. So although this is a bit long, or we will say lengthy calculation, but the calculations are very simple. The calculations are very simple. All you need to know or remember is the concept. And I've also included the solution here. This is how we have solved everything. All right. Next numerical. A temporary structure has been constructed at a cost of 1,20,000, assuming its salvage value as rupees 30,000 at the end of 6 years. Determine the amount of depreciation for each year by the straight line method and the WDV method at 15% per annum. So the question clearly tells us that we need to calculate the depreciation, but we need to use both the methods. So depreciation, we know it is the loss in value due to normal wear and tear or climatic conditions, right? How do we calculate the annual depreciation? I hope you remember the formula we have discussed. It is calculated as D is equal to C minus N S divided by N, where D is the annual depreciation, C is the annual cost, and S is the salvage value. Salvage value is the value that the property may fetch at the end of the useful life, and N is the building in years, right? So we have the written down value method, which is calculated by C. D is equal to C, which is the original cost, multiplied by 1 minus P into N. C is the original cost, N is the life in years, and P is the percentage at which the depreciation is charged. So all you need to do is remember these formulae and you can easily solve. So let us see the solution. Using the straight line method, we have 15,000 straight line, but when we have to calculate at the end of 6 years, the total depreciation is 90,000, multiplied it by 6, and the book value is 1,20,000 minus 90,000, so 30,000. Then the rate of depreciation, this formula will be used. P is equal to 1 minus salvage value divided by the original cost, and this is how we will calculate, right? This is how we will calculate using the other formula, the written down value. All right. I hope this is clear. Next, find out the encumbrance factor and value of the usable FSI from the following particulars of the property. So we are given the land area, the total built up area, permissible value, rate of construction, rate of land cost, desired rate of return, usable carpet area, and the monthly rent on carpet area basis. So how do we calculate the cost of construction? We multiply the rate of construction cost with the total built up area. So the cost of construction will be 205, 205 multiplied by the rate of construction 5,000. So simply we can calculate it, right? It will be 10,25,000. First thing, all right. Then how do we calculate the cost of FSI used? We will multiply 205 again, which is given as the total built up area, with the rate of land. So 205 multiplied by 2000 multiplied by 2000, which will give us the value 4,10,000. All right. Then third point will be the total cost. The total cost and the desired yield will now be calculated. Why? Because 9% is given the desired yield or return, yield of return. So the total cost, we will add both of these will be added, which will give us the value around 14 lakh and 35,000. So 14 lakh 35,000 will be the total cost, and we will multiply it by 9%. We will multiply it by 9% or 0.09, which will be 1,29,000. Just follow these steps, follow these calculations one by one. We are solving each and everything one by one. Then, how do we calculate the estimated yield? So, we will multiply 50, which is the monthly rent on carpet area basis, by 155, which is the usable carpet area, into 12. Right? So 50 into 155 into 12, which will give us 93,000. From here, the simple calculations are there. The usual outgoings is 1 by 6 of the yield. So 93,000 divided by 6 will be 15,500. Then the net annual yield can also be calculated. It will be 77,500. And finally, how do we calculate the encumbrance factor? We will divide the net annual yield by the usual outgoings, or we will divide it by the estimated yield. So 77,500 divided by 93,000, which will give us 0.833. 0.833. All right. So this is how we will calculate the encumbrance factor. Then we also need to calculate the value of the usable FSI. So simply what we can do, we will subtract from the land area the total built up area. So 533 minus 205, which will be 328 meters square. And the value of the usable FSI, we have calculated the encumbrance factor are 0.833. So 328 into 0.833 and multiplied by the rate of land cost. So that will give us 5,46,448. All right, so this is how. So whenever you are solving these numericals, step by step calculate each and everything, and it will become easy. So I've also given the solution here for your reference. So each of the things I have calculated step by step. Now we have the last question. Which one of the following statements in respect of reverse mortgage loan is appropriate? So when we are talking about the reverse mortgage loan, which of the following is correct? It provides the person who owns the house to retain and release capital without affecting sale. Option B, persons beyond the age of 55 are not eligible for RML. Option C, under the reverse mortgage loan, the borrower is required to service the interest when called for. And option D, the borrower's stake is low initially under the RML. Answer this question. Which of the following statements is correct about the reverse mortgage loan? So, when we talk about a reverse mortgage loan, how is it different between a normal mortgage? In normal housing loan, where the property being purchased is mortgaged to the lender, the borrower avails a loan to begin with. And at that point of time, his stake in the property is low because the EMI is paid on dues. Then the loan amount reduces and his stake in the property increases. Their ownership in the property increases as they make the EMI. However, what is happening in the reverse mortgage, this is completely opposite. So the borrower initially retains a high stake in the property and they receive a regular cash flow. Then over time, when the loan amount increases, then his stake in the property reduces. All right, this is a reverse mortgage loan. Then if we talk about the eligibility criteria, so any citizen above the age of 60 age is eligible. Indian above 60 years of age. Married couples will be eligible as joint borrowers. Should be the owner of the residential property. It should be free from any encumbrances. The residual life should be of 20 years of the property, right? And commercial property is not eligible for availing of the RML. So the correct answer here, which of the following statement is appropriate, will be option A. It provides the person who owns the house to retain and release capital without affecting sale.